Are they buying opportunities now or not? Deepak Jasani, the head research of HDFC Securities, joins in now. Deepak, you know, when the market wasn't falling, a lot of people were saying valuations are frothy. We will wait for corrections to go ahead and buy. Now we're seeing a big cut in a lot of these names which have seen a big rally, be it, you know, these defense names, rail names, a couple of these infra names, and a lot of IT names where people would have missed the recent rally that took place as well. What are you suggesting to your clients? Do you see further downsides from here, stay on the sidelines, or maybe start dipping into this big decline that we've seen in our markets?
Yeah, good afternoon, and thanks for having me. Mangalam, currently we are seeing a combination of economic troubles and geopolitical issues, which has not happened for some time now in the markets. A lot, as you must be aware, markets are driven by sentiments, and now how far the sentiments are punctured due to this and how much time will it take for this to get repaired, we will have to watch out. We'll have to closely monitor that. Having said that, I think the sell-off temporarily seems to have come to some sort of a bottom, near-term bottom. Nikkei at about 30,500 and US dollar, USD JPY level of about 140.5. These two levels are supports. So we think in the near term, we could see a small bounce from here, but with traders could take advantage of that bounce. Investors, on the other hand, will have to see as to how far the bounce goes from here and how fast is the bounce. So in case the bounce is very labored, then probably it would mean we will form a lower top. So in that sense, I think investors should lighten up even now and in the forthcoming bounce. Buying the dip has always worked in the past. We have seen from June 22 or from March 23, markets haven't seen a very big correction, and every dips have been taken advantage of. So this time around, I think it would be wiser to hold back a little before jumping in the buy on dips kind of a strategy.
Okay, so just to get it clear, Deepak, today if somebody wants to deploy money into the markets, you tell them to hold off and probably assess what's going to take place with the global markets. Right.
Because the geopolitical developments are also not yet over for the time being. So every bounce may be sort of taken advantage of from now onwards. So one will have to let the market settle down. Unless the bounce is very sharp, I think they will get sold into.
Okay.
What sectors would you look at putting money in right now? Because, you know, the ones which are doing well are the ones that typically do well during flights to safety, which is the FMCG space, which is mildly higher right now after a spate of underperformance in the past as well. We've seen, you know, some of the pharmaceutical names also see some buying. Would you buy the ones which are doing well right now because they haven't done well in the past? Or would you look at buying, you know, themes which are seeing some profit taking like defense, rail, infra, all of them, which have structural levers but are extremely expensive?
So we would stick to the traditional defensive for the time being, the FMCGs and the pharma. I think IT, there may be some more downside in case the slowdown gets accentuated globally.
Okay. Well, you know, I just want to extend that point, Deepak, because one of the queries that we get from a lot of retail investors is what they should do with a lot of these PSU or PSE stocks that they have invested in and which they're sitting on very good gains with. For example, the Nifty PSE index itself, as we all know, has outperformed. It's up 41% this year itself. But is it prudent to probably just take some money off the table now for somebody who's probably sitting on a good amount of profits, one? And two, would you probably look to re-enter these stocks or enter these stocks at these levels?
Yeah, so as I said earlier, I think it may be a good idea to sell even now and also in bounces, except for in case you are forced to remain invested in equities. So in that case, I think you can shift gradually to the defensives, but otherwise the sectors or stocks which have seen heightened interest from the retailers and HNIs over the last few quarters, I think will continue to come under pressure, and it may be a good idea to take profits off and sit on cash for some time.
Sit on cash for some time. How much cash do you think one should sit on, say, because mutual funds are sitting on closer to 7 to 8%, at sometimes even 9%. Some of the PMSs are sitting on 20, 25%, etc. What proportion of cash do you think should be good? And should one also look at gold as an asset class right now, given the sort of uncertainty that we're facing globally, despite the rally that we've seen in gold?
So gold allocation, we have always been advocating 5 to 10% of your financial assets should go into gold. And that stays even now, because in an uncertain world, I think gold can at least save your capital, if not give you appreciation. Now, as far as cash levels are concerned, I think unless you are forced by regulations or by compulsions to beat the benchmark, you have the flexibility to go even 40-50% into cash. This is basically for retailers and HNIs. Mutual funds and PMSs have the other two compulsions, so they may not be able to raise capital to that an extent.
Right, just a correction, Ekta. You know, we were saying crypto has lost $70 billion in value. It's actually $270 billion. Our ticker team just alerts us, $270 billion in value lost in alternate assets as well.
Yes, absolutely. And that's exactly why gold has become this topic of discussion as well. But Deepak, you know, just wanted your thoughts in terms of the entire IT space now. How would you approach it, considering that there are these gyrations of, you know, negativity which is coming out from big tech? In that context, how would you approach a couple of these IT firms?
So, in IT, I think the visibility of large contracts or TCVs, as it were, may still be lacking for the next 1 or 2 quarters. So, in that sense, they may optically look cheap compared to the past valuations, but their growth rates have also come down. So, I think IT stocks are typically they are trading plays. So in extreme sell-off, you get into them, ride the 10 to 15% up move and get out unless there is a sustainable improvement in the visibility of order flows.
Final question then, what about valuations? I mean, at 25,000, Nifty was closer to 22 times 1 year forward earnings. And now we have nearly 86% of the Nifty weight having reported earnings. So far, it's been a little bit of a mix because we saw earnings downgrades of nearly 1.2% of the Nifty so far for this year and almost 1% for the next year as well. On a valuation check, what have you made of these earnings that have come so far, and what looks good post that and what doesn't?
So as far as the valuations are concerned, I think there are key issues to be monitored. One is the final outcome of the monsoon, its spread and intensity once it finishes. We have seen pockets of excessive monsoon and shortage of monsoon in different areas of the country. So ultimately, by the time end of September, how does the monsoon sort of exit? That will have to be monitored very closely. Q1 numbers, the balanced numbers, I think we will have to see. As you mentioned, it has been a mixed bag. There is struggle on the top line and also margins for quite a few companies. Asset quality seems to have come under pressure after 3 or 4 quarters. So those are the worrying signals. There is a US presidential election in November and there are state elections in October in India. So those things will have to be monitored. Now, valuation-wise, I think we will have to, in case the sentiment remains shaken or poor, despite good earnings expectations, the valuation can slide down. And analysts will, at that point of time, rush to sort of downward project the estimates.
Right.
So, in that sense, I think valuations will become attractive only when we are closer to 17, 18, or maybe 18 and a half times earnings.
Okay. All right, Deepak, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in terms of the markets. Just want to point out that a lot of the stocks say, for example, the M&Ms, which have already given returns of around 54%, ONGC, which is up 51% this year, BPCL also, which is up around 50-odd%. All of them are down anywhere between 2 to 6-odd%. 6-odd% for ONGC at this point. It's the top loser on the Nifty. So sharp cuts coming through there. We'll take a break, but we'll continue with our coverage on the markets. We'll be talking technicals. Manish Hathiramani of Deen Dayal Investments will join in with some trading calls. Stay tuned.
I came here in 1991. 1991, that was my first year of college. I came here for Inter-IIT. So I remember this campus especially because this is one thing that I think especially the women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like, I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do, and I think coming back to this campus...
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya. And you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have... I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CII, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation and the quality of talent and the kind of ownership that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters.
Welcome back. Well, we do have Manish Hathiramani of Deen Dayal Investments joining in on the show to discuss the technicals now. Manish, hi, welcome to the show. Well, tough day. It's all in the red right now. But what would your approach be? Do you think that maybe a buy on dips would be prudent?
Good afternoon, Ekta. Not so soon for sure. Not because I feel that all hell has broken loose, but because we have triggered that level of 24050. Which was the lows around the budget day. While we are trying our best to maintain that, we are still trading below that. Should we close below this 25050 level? So I think the chartical terms for the short term becomes bearish. A break of today's current low also can take the Nifty down further. I would be working with levels closer to 23,300.
All right, 23,300. If it does not cross past that budget day high today, that's quite a call, Manish. Typically, you do give big calls. Individual stocks, what is it that one should do then? Because, we are seeing a sharp sell-off in a lot of these names, which had seen a rally and some flight to safety in FMCG and pharma. How are you positioning yourself on stocks?
Well, I think if Nifty does break this 24050 on a closing basis, maybe a few minutes before that, I would be looking at two sell calls, namely TCS and ONGC. TCS would be a sell for a target of 4090, stop loss of 4290. A structural breakdown has been seen on the stock. We first broke the supports of 4300 with good volumes. That happened on Thursday, Friday last week. The weakness has been further cemented with this morning's gap down opening. The second one is on ONGC for a target of 290, stop loss of 330. Large volume blocks have broken this stock also around the support levels of 315. With a favorable risk is to reward, the stock can go down to 285 to 290 levels.
Okay, all right, Manish, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in on the technicals. We'll take a break. Up on the other side, we'll get you more on the markets. Connect with Daniel Morris of BNP Paribas Asset Management as global markets. Do take a deep dive.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Welcome back. The Nifty is still holding below that 24,000 mark, closer to 23,970. Reliance is at the low point of trade as we move towards the European opening. Where do we go from here would be the big question. But all of that will also be impacted by what macroeconomic data is currently underway in the world. More than that, the currency impact as well. So we have who better than Lata to tell us exactly what's taking place in the yield space around the world, the macroeconomics of it all, and the currency impact. Before we go across to the expert, we have our in-house expert with us, Lata.
Well, though the headlines may say, lowest in 2 years for bond yields, lowest in 26 months, I think, and lowest rupee ever record, we must know that it is a very small move. The story in emerging markets and in India is a question of not reacting so much to the turmoil that we have seen in the US markets, in the global or in the developed markets. Just look at the dollar index. It's fallen from 104 on Thursday, before all the data came, to about 102.97. That's a very big index fall, over 1% in terms of the dollar move itself, such a large currency. But look at Asia. The yen and the ringgit are up 2.2%. I mean, because the dollar has fallen, they are up versus the dollar. The Chinese renminbi and the Filipino peso are up 0.2%. The rupee and the baht have fallen, but fallen how much? 0.1%. So although it may look like a record fall for the rupee, it's not fallen much. To be fair, we understand from dealers that the Reserve Bank may have come and sold dollars. But in any case, it's not a volatile fall like you're seeing in the US equity or the global equity markets and even the Indian equity markets. The point is the kind of fall that we have seen in the global markets is led by the US fall, the US equity fall, and the US tech fall. So it need not necessarily be a big macro fall for Asia. And again, coming to the bond yields as well, the bond yields fell by 20 basis points in the US. And if you compare it from July 1st, the US yields have fallen by some 80 bips. They were 4.5%, the 10-year yield in the first week of July. And now they are standing at 3.7. So it's, like an 80 bips fall. But what is the Indian bond yield fall? It was 7%, 7.01 in the first week of July. And now it is 6.84, all of 16 basis points. So we must accept that this is not disturbing Indian macros just yet. But it is just yet. Already there is a whisper in the street that the Reserve Bank may have to change its stance as early as the upcoming Thursday policy. It's saying a withdrawal of accommodation at a time when, the Fed will probably supply liquidity and supply, rate cuts, probably 50 bips, probably intermeeting, may be a bit of a, out of date policy, and they may, even if they don't change the stance itself in the policy statement, they may indicate some dovishness in the press conference that follows the monetary policy.
Okay, well, important RBI policy to monitor there then. Lata, thanks very much for that. We do have Daniel Morris, Chief Market Strategist, BNP Paribas Asset Management, now joining into this conversation. Daniel, I'm sure you must be working the phones, talking to your clients. But, the key question, which Chris Wood, in fact, mentioned in his report, is that there could be an intra-meet by the Fed in order to assess whether they should cut rates. Is that a possibility?
Well, certainly, but I think we want to have a little bit of perspective here. Certainly the markets have moved a lot. But number one, it tends to have been those markets that were already up significantly this year. And if you look at the year-to-date returns as of today, those numbers are actually still quite good. And you can imagine that if it had been a straight line from January 1st to this level today, without the volatility, frankly, a lot of investors would be quite satisfied with those figures. Secondarily, even if the non-farm payrolls labor market data in the US was a bit disappointing, we're really not seeing other economic indicators at all pointing to a recession. And also keep in mind that the labor market is a lagging, not a leading indicator. So we really want to be looking more, say, at PMIs to get a sense of how well the U.S. economy, at least, is doing.
Right. So what's your view on the impact that, the JPY US carry trade unwinding is happening? I mean, a lot on the street were anticipating that. now that it is happening, would you be able to quantify the sort of impact?
Well, I think it's quite clear when you look at the Japanese equity market, and one of the worries that we've had so far this year, and one of the reasons that we've had a neutral rating on Japanese equities was the worry about the vulnerability of the currency. And if anything, the currency had continued to weaken even as the Bank of Japan had tightened rates, which seemed a bit surprising. We had expected the currency to strengthen sooner. Now it has in a very significant way. And then as anticipated, the impact on the equity market is quite large. And it's that uncertainty really around the currency that remains without question the fundamental issue for Japanese equities.
Okay, Mr. Morris, what's your in-house estimate of how much more the dollar can fall?
I'm sorry, can you repeat that? The sound's a bit low.
Yeah,
what is your estimate in terms of where the dollar index could move, or how much could it correct?
Well, certainly no estimate on the degree of the change. I mean, clearly it's going to depend on primarily on the economic data. If we think broadly the strength of the dollar that we've had so far, it's been premised on a growth differential, certainly say relative to Europe and much of the rest of the world that was in the U.S. favor, interest rate differentials with the Fed. At this point, being relatively late to the game if it comes to cuts in September. Those will be the key factors. I mean, really, we're going to be looking for what kind of communication we get from the Fed. For example, would there be a meeting before September? Would they envision a 50 basis point cut? That'll feed through the dollar, and that's going to be the key factor.
But would you believe that there could be sell-off of EM markets like India as well? By global funds, or do you think that may come? I mean, can there be a growth scare in countries like India?
To be honest, for India, I think it would be less a growth scare. People have been talking about valuations for Indian equities for a very long time. Nonetheless, the market kept going up, and if anything, recently compared to many other global markets, still performed relatively well. But I think now that question is going to become much more pertinent to investors when they see a much less supportive global environment for risk. Markets with high valuations are going to be one of the first things that they look at.
Right, just a final question before we let you go. Typically, the order of action from central banks usually is commentary number 1, open market operations number 2, and then perhaps rate action number 3. What kind of possibility do you ascribe to a mid-Fed meeting cycle cut? I mean, are you in that camp?
At this point, no. We are anticipating a single cut in September. And then another one in December. But obviously, when the facts change, sometimes you do have to change your view. But at this point, that's our expectation through the rest of the year.
Okay, all right, Daniel. Thanks very much for joining in and speaking with us. So no intra-meet rate cut expected from BNP Paribas Asset Management. They do expect the Fed to probably cut rates in September and then in December. We'll take a short break. And on the other side, we'll get you more details on the markets. But before that, we do have another macro call. We'll take a break and we'll be back with more. Stay tuned.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and cnbctv18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Welcome back. Well, the Midcap index is now showing a 4% cut as we speak. So the Midcap index is down over 2,300 odd points. Low point of the day. There's no respite which has really taken place in terms of the advanced decline ratio. So that currently stands at around 1:15 on the National Stock Exchange. So only 147 stocks advancing to 2,287 stocks declining on the National Stock Exchange. In terms of stocks, remember that a lot of these stocks such as IFCI, which has run up around 159% this year, is seeing a cut of around 7.5%. So there's profits being taken off the table there. IRFC, which is up around 81% this year, is seeing a cut of around 6%. And from the frontline space, we've been pointing out the likes of M&M is showing a steep cut of around 3.4%. But there are steeper cuts in stocks such as ONGC, which is down around 6%. So do watch out for that. A little bit of green seeing in the FMCG stocks. So HUL is just about holding its head above the water, along with Britannia, which is up around 0.4%, Nestle, as well as Tata Consumer. Not even pharmaceuticals in this entire defensive buying, only FMCG, which is managing to hold up. We'll take a break and be back with more. Stay tuned.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
My wife, for instance, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or something, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked. My kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very, very helpful as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, so I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my, clan to go to university. So when he first came to campus, and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be X, Y, or Z, or even executive director, I don't think even I knew what the International Monetary Fund was.
Welcome back, and you've joined us for an exclusive conversation with Nidhi Khare. She's Secretary, Department of Consumer Affairs. Ms. Khare, thank you so much for joining us. And let's start with the good news first. And the monsoons have been good till time. The sowing numbers look better as well. So how are you looking at the overall ongoing sowing numbers? And of course, till when do you think that the sowing would be completed?
That we have come out of the El Nino effect, which meant, for the past 2 years, intense heat and lower rainfall, and because of which all the agricultural produce were getting impacted. We are now coming out of El Nino, and therefore we see a very good monsoon, and this is what was also predicted by IMD. With better rainfall, this year we will definitely see a very good production of not only pulses, the kharif pulses like urad and tur. We will also see very good cultivation of onions, tomato and other such crops. So this is providing me a lot of relief because with better production, I am sure consumers are going to not only have better availability but also at a better affordability.
You mentioned pulses, and that clearly has been in red zone for quite some time, most of the last 1 year as well. With the current sowing one and the kind of imports, various duty cuts that you have given in, would you say that you are in a comfortable position as we head into festivals?
As you would know that we have made the imports under the free regime only to make sure that because there was a production fall this year in chana, the prices were rising. So basically we wanted to make sure that if pulses are available in any corner of the world, they can make their way to India, and so that the consumers also get it, their access can be improved. This would also make the prices stable. And as we can see that because of now good monsoons and because of good sowing of kharif pulses, now things are looking better, and we already see at least 10% discount, downward trend in the wholesale prices of all the pulses. Chana is still stable at a very high price, and therefore we had improved the availability of yellow peas. I think yellow peas will also support and sustain for the gap that we have in chana. The prices are expected to be now showing a downward trend in the retail markets also, and including China also. We keep monitoring the prices from all the 550 centers across the country, and we are keeping a very tight vigil on the prices that are faring.
Ms. Khare, your ministry and the Ministry of External Affairs has been talking to Mozambique because there has been an issue on pulses imports from there. What is the situation like right now?
There were disturbances in the, in the supply of pulses from Mozambique and also other Eastern African countries like Malawi, Sudan, and so on. However, because both the Ministry of External Affairs and Ministry of Consumer Affairs were working on it, we have made, our request to the Mozambique government very clear, and we are trying to get seamless dispatches of pulses. These 1400 containers which are arriving in India very, very soon, and there are other 400 containers which are also on the way. I think these, with the new harvest which is coming in both Malawi and Mozambique, we will be getting seamless dispatch from there. I think both the countries are in agreement about uninterrupted flow of supplies, especially in view of the festival seasons which are coming up. We have already, we are working at different levels, and I think the mood is very positive and very, very cooperative.
Sure. There is also high inflation that we've seen in the recent few days in perishable commodities, whether it has been greens, tomatoes, onion, potatoes. We do know that the government has had to intervene in case of tomatoes, but would you say the situation is better now, as you mentioned?
I think in the intense summer that we saw, the green vegetables, the prices went up. But now with the monsoon all over, I think the green vegetables prices have also come down. Potato is, it is stable. In fact, in all the three commodities, potatoes, onion and tomato, it is stable. In tomato, we had to make a small intervention in a few places where the prices had breached 100 rupees. And so both in Delhi and Mumbai, we started through NCCF retail sale of tomato at 60 rupees, and then it was further down marked to 50 rupees. And this also resulted in cooling of prices in the retail market. Now the prices are very, very comfortable. So I see no problems in prices of vegetables, including potato, onion and tomato.
That is good to know, Ms. Khare. And a final question to you then, and this is on the issue of spices being contaminated. And we've seen various reports, international and Indian, talking about this. We do understand that you're working on FSAI with this, but do you think that that is yet another issue that has been sorted?
This issue, because it's a food item, it is basically FSSAI, which is a regulator for taking action. And when we came to know about it, we had flagged this issue with FSSAI, and FSSAI, as you know, has taken action, a very strong action against the people who were perpetrators. We have to keep a constant vigil on the quality of food items which are being made access to the consumers, and I think we will continue to do that work.
Ms. Khare, as always, thank you so much for joining us here at CNBC TV18 with all those updates and in the sense on what the government really seems to be doing in sense of food prices and, of course, in sense of availability and affordability there. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.
came here in 1991. 1991, that was my first year of college. I came here for inter-IIT. So I remember this campus especially because this is one thing that I think especially the women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like, I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do, and I think coming back to this campus...
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya. And what, you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have... I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CI, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation and the quality of talent and the kind of ownership that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBCTV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBCTV18. Rising concerns over a possible US recession, a possible mid-meet Fed rate cut and the Japan carry trade all combine to spook the equity, currency, bond and commodity markets.
Despite a ferocious 20 basis points fall in the US yields, India's 10-year bond yields are down only 5 basis points to 3.84, even as the CNBCTV18 Citizen MPC sees no change in rates or the stance from the Reserve Bank of India.
Britannia clocks healthy volume growth and sees a good pickup in rural consumption, modern trade and e-commerce, with rising commodity prices hurt margins. FMCG stocks gain on expectations of higher consumption.
SBI Chairman Dinesh Khara remains upbeat on growth and credit quality even as deposit growth slows down, but analysts fret over crimping margins and rising stress going forward.
Warren Buffett's Berkshire Hathaway likely sold almost half its stake in Apple for over $84 billion, boosting its cash pile to $277 billion. This is being read as a strong signal of frothy valuations. Hello and welcome to Business Lunch. I'm Sonia Shenoy and with me is Hormuz Fatakia. Not a good day for the markets at all. In fact, global markets, after a very long time, are seeing the first real signs of a correction. Now, whether This will extend itself or not, only time will tell. But for now, there is no respite in the market. We are at the lowest point of trade. But the important point to remember here is this, that for the last 1 to 1.5 years, we haven't got any major correction or pullback in the market. It was just a matter of time that this had to come. Of course, we have the genesis of this fall is the global market sell-off that we've seen. Signs of rising recession in the US, the weak jobs data, the Japanese market is under pressure. But remember that in the last 10-15 years, if you've mapped it, the Nifty has always given a compounded growth of about 12-13%. And hence, this is perhaps a pullback in an otherwise longer bull market. But time will tell. For now, some views coming in. Treasuries are surging as traders are betting on an emergency Fed rate cut. So there's lots. It's an evolving story. But for now, we're dealing with the fall in this market.
The flash is also showing in the bit of a recovery in the futures of the Nasdaq as well, because at one point the futures were down over 1,000 points. Now they recovered to about 800 points as we speak. So there is some bit of hope that the Fed will have an emergency meet. All of it is just speculation. There's nothing official just yet. But the index now down below, well below the 24,000 mark, 3% down on the Nifty, trading well below the lows of the budget day. But the sectoral indices are seeing some really deep gashes this afternoon. The metals index is down 5.5%. The realty index is also trading with losses of over 5%, as is the PSU bank index. And of course, the Nifty small cap index, which is also trading with losses of over 5%. And all of these high flying stocks, be it the PSUs, the railways, the defense names, all of them are seeing some bit of selling pressure in today's trading session. And it is showing up on the screen as well. 23,950 on the Nifty so far. The Nifty bank is now below the 50,000 mark. So that is also one of the underperformers. All the global facing names are seeing a bit of selling pressure. But the top Nifty loser today is Tata Motors, 7% lower now. And ONGC is the other one reporting results today. Another 6.5% down on that stock as well. We'll continue our focus with the markets now. And the markets as we speak have seen a sharp sell-off following weak global cues. And Mangalam is now joining in to take us through these market moves. Mangalam.
It's a trifecta of problems, Hormaz. It's US recession fears, mixed earnings in both US and India. We forget that, Intel was down 26% on account of earnings miss. And also India, so far, the earnings that have come in has resulted in a near 1% EPS cut for this year itself in terms of expectations. And thirdly, our hefty valuation. So there was a clamor for correction in the market. This was just one of those triggers. Global sell-off. Nasdaq is in correction zone. This morning we saw a cut in Nikkei, Kospi, and also the EU futures are suggesting a weak opening. Thereafter, the only thing that rises when everything else falls are, the correlation between asset classes. And we have alternate assets, including crypto, which has seen a sharp sell-off. Nifty down nearly 750 points. The Sensex down 2,400 points. The Midcap index has seen a worse fall. In fact, over the last couple of sessions, even when the Nifty was up to 25,000 levels, the Midcap index was actually weak. And the broader market, sentiment tells you that over 2,200 stocks declining for just about 150, which are in the green. And as we speak, there are over 450 BSE stocks which are in lower circuit versus 250 in upper circuit. And there is no Group A or Group B stock in upper circuit as well. So that's telling you about the weakness in the market. India VIX has seen the highest intraday spike ever since, 2015, August 2015. So that's another thing we have to keep an eye out on. What are the nature of stocks which are falling? They have to be global facing, commodity facing, or perhaps, stocks which have seen a big run up. So you have Tata Motors, ONGC, Infosys, Hindalco, all of them lower. Then the ones which have seen a big run off, the likes of NCC, GMR Airports, even LIC Housing Finance on the back of poor numbers. And then some of these defense and rail names are also seeing a big sell-off. What are the stocks which are doing well? We have HUL, Tata Consumer, Marico, Dabur. Typically the stocks which are seeing flight to safety with improving outlook in terms of rural demand. FMCG stocks are the only ones bucking the trend and have seen mild green performance, though they too are off the highs. The most important things to track from now would be commentary from the Fed. Typically central bankers follow three-step processes. One is commentary. If that doesn't work, then it's open market operations, and if that doesn't work, then you have the action, which is the rate action. So we'll have to keep an eye out on commentary first. And secondly, on Thursday itself, we have the RBI policy outcome. Do they make a change to their stance and take note of what's taking place in the global markets is something that we'll watch out for crucially. But right now, under a trifecta of problems, we've seen a sharp sell-off.
Okay, a sharp sell-off following the steep fall in US bond yields on Friday. Indian bond yields too have fallen to fresh 26-month lows of 3.84%. The rupee too has hedged down to fresh all-time lows of 83.84 in the intraday trading today versus the dollar. Lata is here with an editor's take. Lata, over to you.
Well, I'm going to speak about the markets that didn't fall much, or the dog that didn't bark. You know, most of the EM yields and currencies are actually a picture of stability, and it's a very minor fall. Some of them have even risen. Just for context, the dollar index has fallen from 104.5 on Thursday to about 102.7. So that's almost 2 units that it has fallen, which would work out to about 2%. But because the dollar has fallen, counter currencies actually rise because it's always measured against the dollar. The yen and the ringgit are up 2.2%. The Chinese yuan or the renminbi and the Filipino peso are up 0.2%. Yes, the rupee and the baht have fallen, but just by 0.1%. For the record, it may be all-time low, but it's really a minor fall. And there is, of course, an expectation or a suspicion that the Reserve Bank may have even supplied dollars. That's what dealers tell us. Now, you should not expect that because they are selling somewhere, they buy in India as well, because traders globally have lost money. So there is no question of coming and buying. But extra selling of Indian bonds or emerging market bonds and currencies may not happen unless the US slowdown threatens to become a global growth scare, which at the moment it is being seen as a US-centric and a US tech-centric fall. Now, Indian bonds, just to complete the story, have fallen by about 5 basis points. And if you look at it from July 1st, then the fall is about 16 basis. They were 7%, and now it is 6.84 for the 10-year, whereas the US yields were 4.5%. The 10-year, as of July 1st or July 1st week, and now they are at 3.7, an 80 basis point fall. So in India, there is a murmur in the bond markets that if there is an overall growth scare because of the US crunch and jobs data, then the Reserve Bank will have to think. So in our own Citizens MPC, we did notice that all members voted for no rate action by the RBI on Thursday. But when it came to the stance, there was a bit of a dissonance. Although the majority still said no stance change, there were 2 people out of 5 voting for a stance change. And the market has enough number of people voting for a stance change. Maybe you want to get a piece of the action that happened in the Citizens MPC of CNBC TV18.
I think the MPC will continue to hold the rates.
Okay. Sajid?
Hold.
Hold. Samiran?
It's a hold.
Sonal?
A pause.
Okay. Dr. Sen?
Hold.
Okay, that's a unanimous vote. Now let's come to the stance where I have heard some different arguments. Will the MPC change its withdrawal of accommodation stance in this policy? Shaumyo?
I think the stance will also remain same, withdrawal of accommodation.
Okay. Sajid?
I believe for now they will retain the stance.
Okay.
Withdrawal of accommodation.
Okay. Samiran?
Retain the withdrawal of accommodation stance.
Sonal?
They should change, but they will likely retain.
Okay.
Yes.
Should. So I'm taking you as neutral. Dr. Sen?
I agree completely. They should change, but they are likely to retain.
Okay, so I will take it as 2 neutral votes, and who knows, that might be the surprise in this policy. Very quickly, a third question. When do you see the first rate cut? Shaumyo?
Maybe possibly the first rate cut could come in December 2024.
Sajid?
The October to December quarter.
Okay, so
given global developments.
Could be as early as October then. Samiran?
We are calling for April 2024.
Oh, okay. Unchanged you remain. Sonal?
October.
October. That's I think 2 people are getting it a little forward. Dr. Sen? Okay.
December or early next year.
Interesting views coming in there from the Citizens MPC. But one of the other factors that has spooked the global markets is that has been the yen carry trade, which has been in focus over the last few sessions, as the yen has appreciated sharply after the Bank of Japan raised interest rates and reduced bond purchases. Now, this has caused investors to unwind their positions. Now, how is all of this affecting the global markets? Prashant is here to explain all of that. Prashant.
Hormuz, whenever markets sell off, and we've not had big market sell-offs for a long time now, but I remember remember over the last 15 odd years, whenever markets used to sell off, people used to go to the yen, unwind of the yen carry trade immediately. Is that happening? So I always resisted the temptation to do that, to blame it on sort of, the unwind of this carry trade. But the fact is that we've actually seen an astounding move on the yen. Let me just begin by telling you what is the yen carry trade. It is essentially borrowing cheaply in yen because interest rates in Japan have been near zero for 25 years, and then investing it higher yielding assets, be it stocks, futures, bonds, currencies, anything around the world. Anything which gives you more than 0.5%. You assume currency risk, of course, and then you invest it and you make returns. This is anecdotal, but a lot of Japanese retail money has come via that route because, I mean, the difference exists into India as well. So that is the yen carry trade. Why are we talking about whether it is unwinding? Is because the yen has gone from 162 early July to 142. I mean, basically, it has rallied, 10% plus 12% in the last 1 month. A currency has rallied that much, and not some sort of, piddly sort of frontier market. This is Japan we're talking about, and that's the move we've seen. What has also happened is that government bond yields in Japan have gone up and yields in other markets have come down. So the spread, the differential between the government bond yields in Japan and other places also came down. And, it reduced the attractiveness of trying to buy other assets using cheaper yen. What has triggered this, of course, is that the Bank of Japan started hiking interest rates. We saw 2 hikes, and the assumption was that Bank of Japan is the start of a hiking cycle at a time when the rest of the world is actually thinking about when will rate cuts come. So Japan was going one way, the rest of the world was going the other way. And that has triggered this massive move in the currency. So think about it. I mean, if you borrowed cheaply in yen and if you've invested elsewhere, and the currency moves, I mean, USD JPY has moved 20 yen in the last 1 month. You are essentially looking at massive mark-to-market hits, and that basically forces one to unwind positions willingly or otherwise. And that is essentially what supposedly is happening around the world. There's no way to really confirm this. I mean, I've tried many times in the past also to get a sense of what is the size of this carry trade globally. But you get all kinds of numbers, but presumably it's in the hundreds of billions of dollars because markets themselves have become so big. And of course, they're so interlinked now. So that is essentially the fear what is happening right now. What will stop this? The Bank of Japan itself, I mean, its hiking campaign is, according to me, dead in water. I mean, they cannot hike anymore. Perhaps we should be looking at intervention in financial markets. So will the yen stabilize? I think that will give some comfort going forward. Back to you.
Okay, thanks a lot for that. Well, you can also read this entire explainer on carry trade, etc. on our website. So do go on to cnbctv18.com for all the latest news and information, including this story that you just heard from Prashant. But let's take a short break. When we return, we'll get you more news and updates on the other side. Stay tuned. Budget headquarters.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Back with us here on Business Lunch and moving to some news from the aviation space, marking 18 years of flying and spreading its wings across India. Indigo celebrates its anniversary with a flurry of new business updates. Danish is joining in now with more details. Danish, what is the latest announcements made by Indigo?
Well, Indigo has announced its foray into business class services as the airline has introduced Indigo Stretch, which is basically a business class product which will be initially introduced in domestic flights. So from mid-November, there will be at least 12 aircraft which will be featuring 12 of these seats, and this will also offer customers an ample leg room. And as far as the configuration of the seats is concerned, it will be in a 2-2-2 format. And besides this, the cities that Indigo will fly using these business class seats will be initially connecting all metro cities. So from flights between Delhi to Mumbai, Delhi to Chennai, Delhi to Kolkata, Delhi to Bengaluru are the first few routes where Indigo will fly. And the pre-booking of this will begin from 6th of August, and the initial tickets have been priced from rupees 18,018 rupees. Another thing that Indigo today launched was its loyalty program. So Indigo has launched the Blue Chip loyalty program, and in this loyalty program, every passenger can earn for every flight that they're flying in, and it will also depend on the type of route and also the time of the flight when a passenger is flying. Besides this, Indigo has also given us a glimpse of how the future will look like, as the airline is all set to receive A321 XLR from next year onwards. Similarly, the airline will also be inducting a wide body aircraft 2027. So we have it from Indigo. They are moving on from a low cost carrier image to offer different and a unique airline in India.
Okay, thanks a lot for that. So Indigo moving away from its earlier business model and now looking at business class products. Well, that's going to be interesting. And a lot of analysts do believe that that will help them with their rise in profitability as well. Let's take a short break on that note. On the other side of the break, the market continues to sulk. So when we come back, we'll try and get you more news updates.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And what a great way to celebrate our own 25th year. with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and cnbctv18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18.
Welcome back. You're watching Business Lunch on CNBC TV18. Well, it's finally the end for Go First, as we understand from sources that lenders have now voted in favor of liquidating the airline. Ritu Singh has been tracking that story for us from the word go. So she joins in now with more details on that. Ritu, over to you.
It's the end of the road for Go First, with the committee of creditors voting unanimously to liquidate the airline after finding no viable offers. We understand from sources that Go First lenders voted to liquidate the airline after the Singh Pitti consortium withdrew their bid, and Sharjah-based Sky One's offer also fell short of their expectations. Remember, we've been reporting that both the suitors had offered very little cash upfront and had hinged their offers largely on the proceeds from this arbitration case against Pratt & Whitney. Now, banking sources we spoke to said it made no sense to keep pumping in money to keep the airline alive when the aircraft were already deregistered, there were no good offers, and that liquidation was the best move forward. Instead, the lenders are now going to focus their efforts to pursue the case against Pratt & Whitney at the Singapore Court of Arbitration, where they have claimed more than $1 billion in compensation. So if they do win that case, it offers them much better prospects of recovery. Remember, Go First had filed for voluntary bankruptcy in May last year, blaming Pratt & Whitney for supplying faulty engines which contributed to their financial issues. The key lenders to Go First include Central Bank of India and Bank of Baroda, with IDBI Bank also having a small exposure. Now, once all of the legal formalities are completed, the liquidation process will start, bringing Go First's nearly 2-decade-long run to an end.
Ritu, thanks a lot for that. But that is a wrap on this edition of Business Lunch. We leave you with a minor recovery on the Nifty. That's what it is, a minor one. From Sonia, me and the team that put this show together, thank you so much for watching. Midcap Radar up next.
Streaming live 24/7 on YouTube.
My wife, for instance, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or something, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked. My kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very, very helpful as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, so I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my, clan to go to university. So when he first came to campus, and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be...
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. A wee bit of recovery is what we are seeing. The US futures have recovered. Dow futures are now less than 600 points. But yes, of course, it's a big cut that we are seeing in the markets today. Something that we'll discuss through the course of the show. Hey, Vivek.
That's right. A red-looking screen, not a pretty sight, especially given the fact that it's the broader end of the market, that's the mid-cap and the small-cap space, seeing quite a bit of a sharper cut compared to the benchmark indices. But quite a lot lined up on the show. Let's start off with the top headlines. Rising concerns over a possible US recession, a possible mid-meet Fed rate cut, and a Japan carry trade all combined to spook the equity, currency, bond, and commodity markets.
All sectoral indices in the red. Metals, auto, PSU, banks, realty among biggest losers. Mid-caps fall nearly 4%. The advanced decline ratio indicates one stock in the green for every 14 in the negative.
Nuclear software corrects nearly 15%. The company says its revenue declined 7% sequentially, while EBITDA margin and profit after tax also come under pressure.
Okay, those are the top headlines. While we've been talking about the market fall ad nauseum since morning, let's just look at some data. We've been talking about how valuations have been very punchy across the markets. And if we see the valuations across major indices and major market capitalization, for Nifty small cap, it's around 22 times right now, which compares with 15.8 times that we've seen on an average. For Nifty mid caps, it is around 33 times, which compares with an average PE of around 21.57 times that we've seen. So some of them are trading at 50 to 53% of their average valuations right now. Large caps, of course, the gap is not so much. Large caps are trading at 20.88 times. The average P is around 18 times. So that's why that bigger fall on mid caps that we are seeing right now. And the other data that I wanted to look at is the drawdowns that we've seen in times of major corrections or minor corrections as well. So the average drawdowns have been around 15% for large caps, 18% for mid caps, and 19.5% for small caps. This is between May 2010 to May 2024. But in case there are very bad drawdowns, something that we see during periods come by, like COVID, for instance, that's when large caps have fallen the least. Large cap drawdown has been 50.8%, which compares with mid caps at 54% and small caps at 58.6%. So in a market like this, we usually see that mid caps and small caps fall more than large caps, and that is something that is happening today as well.
Very, very interesting data. Thank you so much for pointing that out, especially given the fact that this actually indicates that the large caps tend to fare better. Some interesting data, when you're talking about just the last two trading sessions where we've witnessed the bunt, of the selling pressure. When you're talking about the NSE 500 index, in the last three trading sessions, which are the stocks that have lost the most? Look at Nuvama Wealth, it's down over 12%, Samvardhana Motherson and Brigade Enterprises, other stocks that are down over 10%. Now, coming to the mid-cap 100 or the mid-100 index, as the NSE calls it, Bharat Forge, BSE and Cummins, these are the stocks that have seen a bit of a sell-off. And NSE small cap index, when you're talking about the top drags, there's Birla Soft, there's Titagar Wagons and Nalco. Birla Soft, in fact, has given up over 15% in just the last 3 to 4 trading sessions. But which are the stocks that are making the moves in today's trading session? Hormaz is at the wall. Hormaz, over to you.
It's very difficult to find gainers when there is only one stock advancing for every 14 that are in the red. So we'll begin with the stocks that are in the red. There are plenty of them in today's trading session. We'll start off with BSE, and that is among the top losers on the mid-cap index. And that is also one of the major losers on the downside as we speak today. And most of these stocks are trading with losses in today's session. Paytm has given up most of the gains that it had on Friday's session as well, 6.5% there as well. GMR Airports, Kalyan Jewelers, all of them trading with losses of between 5 to 6%. The railway PSUs, they were the high-flying ones. They have been bearing the brunt in this recent sell-off as well. Most of them are down anywhere between 15 to 25% from the record high levels that they had hit mid-July. So IRFC, RVNL, IRCON, RailTel, all of them seeing sharp cuts in today's session as well, and all of them are at the lowest point of the day. A similar story is panning out for the shipbuilder stocks as well. Mazagon Dock is down 6.5%. It's been a slight recovery there, 5.5% now, but Cochin Shipyard and Garden Reach both locked in a 5% lower circuit in today's session. Some stocks doing not so well on the back of volumes in today's session. Samvardhana Motherson is one of them. At one point was down almost 12%, but still 10% lower. LIC Housing is an earnings reaction as well, 7.5% there. Arcane Chemicals and Phoenix Mills at one point was down 10%, is recovered slightly, down 5.5% now as we speak. And lastly, some of the stocks that are bucking the trend in today's session. Glenmark Life is one of them at the highest point of the day, 6% higher there. Tamil Nadu Mercantile also trading with gains, and Serra Sanitary, after the buyback that they announced, is trading with gains of around 3%. Back to you guys.
Okay, so there are some gainers, if not many, but thank you, Hormaz, for joining us today with that list. It's a good time to welcome Sudeep Shah of SBI Securities for a quick technical check on the markets. Sudeep, good afternoon. Thank you so much for joining us. Well, we've seen a bit of recovery. Do you think we'll be able to maintain these levels? There could be some buying from lower levels, or we are in for a bigger fall now?
Good afternoon, Sonal and Vivek. Sonal, see, what we're seeing in the last few days is that last 3-4 days we've seen the global markets also witness a sell-off, and because of that, Nifty has also fallen over 3 to 4% in the last 3 sessions. Now, post this recovery in the Nasdaq as well as the Dow futures today in the last couple of hours, We have seen some bit of recovery from lower levels, 150 to 180 points in case of Nifty. But what we feel is that till the time 24,300, 24,400 is not substantially or it's taken out and we close above this zone, Nifty could witness selling pressure at higher levels, and a lot of things would depend on the global markets, how the Dow Jones behaves today and how the Asian markets also behave tomorrow morning. So on the downside, we feel that the first support that Nifty could test, it could be 23,800, 23,850, which is the 50-day moving average. And in case this is breached, then 23,500 could be the next level to watch out for. As of now, we are playing with a 23,800 and 24,300, 24,400 kind of range in case of Nifty. Now, if we see Bank Nifty here, the index was much more weaker in the last 5 to 6 sessions in comparison to Nifty. And going forward here for Bank Nifty, a key support zone would be 49,400, 49,600 kind of band. And the importance of this support zone is that this is the 50 DMA, and this zone has not been breached. This 50 DMA zone has not been breached decisively since February 2024. So, that's why 49,400, 49,500 in case of Bank Nifty holds the real key.
Okay. Sudeep, today, given the kind of market fall, we'll refrain from asking you for any tips, but thank you so much for joining us and thank you so much for explaining the levels that we need to watch out for. Let's now slip into a short break. The management of Aeroflex Industries joins us next to discuss their Q1 numbers. Stay tuned.
Even executive director. I don't think even I knew what the International Monetary Fund was.
I came here in 1991. 1991, that was my first year of college. I came here for inter-IIT. So I remember this campus especially because this is one thing that I think especially the women need to hear. So I was, good in table tennis. But I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do. And I think coming back to this campus...
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya. And you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown. Yeah. So congratulations to you and to the entire team at Agnikul. I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have... I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CII, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation and the quality of talent and the kind of ownership that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters.
Welcome back to Midcap Radar. The first management on our show is Aeroflex Industries. The company reported a mixed set of Q1 numbers. Revenue growth slows down while margins saw improvement. To discuss this and more, we have Asad Daud, the Managing Director at Aeroflex Industries, who will talk to us about the numbers. Welcome to the show, Mr. Asad. First up, could you give us a sense, given the fact that right now, you've seen revenue growing at 8%. The guidance that you've given for FY25 is 20 to 25%, implying a very steep ask rate, Q2 onwards. Are you sticking to that particular guidance, or will you be trimming it down?
No, so if you see, we had a record quarter for the first year, the first quarter, wherein we had our highest ever quarterly sales, we had our highest ever EBITDA margins, and also the highest level of PAT. In terms of the growth, so the growth in this quarter has been 8%, but approximately 9% of the revenue for this quarter was impacted due to two reasons. One is due to the ongoing supply chain disruptions in the Middle East. And second was also that we received a lot of orders in the assembly department, but we were not able to ramp up our production capacity in line with the demand. And hence, these are the two reasons for that. So we are expecting this year to be in line with our expectation.
So you will be able to cover it up in the rest of the year is what you're saying, and you stick to your 20 to 25% guidance.
Yes, yes. Definitely.
So, Asad, I just wanted to add more and ask you more on the Middle East tensions, because most of the exporters are talking about how this is impacting their orders. They're either getting delayed or there is some freight cost issues as well. How bad is the situation? 57% of your geographical mix of revenues coming from Americas. There's the fear of recession there. We're talking about the supply chain issues as well. Do you think that is something which could impact orders and revenue activity in the rest of the financial year?
So in the first quarter, we received a lot of orders from USA and Europe, especially for the assembly business. But what has happened is because of the tensions in the Middle East and the rerouting of the vessels, and plus the increase in shipping cost, that also impacted our EBITDA margins. If it wasn't for those reasons, our EBITDA margins would be at least 200 basis points more than what we had. But in terms of the flow of orders, we are seeing a strong order flow from both the US and the European markets. And if you see some of our international competitors also, they are also growing at a pretty significant pace. So I'm very optimistic for this year and for the upcoming years, especially for our industry.
Okay, Asad, you have quite a few commissions, capacities that are getting commissioned in August 2025. What is the kind of ramp up you've seen over there? You did mention that there were capacity constraints due to which you were not able to go ahead and supply a few orders. Which are the facilities also that are coming up H2 onwards, and is there enough demand?
So yes, we are increasing our capacity from 13.5 million meters to 16.5 million meters in this financial year. Out of that, our capacity up to 15 million meters is already being finished as of this month, and the rest of the capacity would be completed by December. We also have our metal bellows project, which will be completed by the third quarter, and the commercial production for that should start by the end of December. So all of these are in line. We also have some additional capacities that we are planning for our, for our recent acquisition that we have done. I think that would also start by the start of the next financial year.
Okay. Asad, thank you so much for joining us. The street seems to like your commentary. The stock is up 3% in a weak market. So let's see which way things go. But thank you so much for joining us today. That's the word coming in from Aeroflex. The stock is up 3% in an otherwise weak market. We'll slip into a short break. Vishnu R. Dusad from Nuclear Software Exports will join us to discuss their Q1 performance. Stay tuned.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Welcome back. You're still tuned into Midcap Radar. Let's talk about Nuclear Software. The stock is down more than 14% in trade today. Reported a weak set of Q1 numbers. Both revenue and EBITDA margins came in weak. To discuss this and more, we have Vishnu R. Dusad, the co-founder and managing director of the company, joining us now. Mr. Dusad, good afternoon. Thank you so much for joining us. Well, you know, the revenue growth, actually, it's a decline this time around of 5.5%, which compares with 30% growth in FY24, 27% in FY23. What went wrong here? And even margins have come in at a 7-quarter low. Can you give us an idea of what the revenue growth and margins look like in FY25?
Yeah, thanks for raising this very pertinent question. We are a long-term player, and over the decades, we have been building an enterprise that would give comfort to our customers. So we do not really bother about our quarters and for that matter, our years. For example, I would like to explain you that, and through you to your viewers, that when COVID hit us, our margins hit a low of 7%. That was because we wanted to make sure that the great resignation that was going on, that doesn't affect our talent, and that is how we
took some major decisions. And similar decision we have taken this quarter as well, or this year as well, where we are ensuring that we are able to both retain as well as attract the best talent.
Right, sir. So Q2 onwards, do you, number one, do you expect margins to recover from the current 7-quarter low levels? And secondly, your order book at the end of Q4 was close to 780 crore. Please confirm that figure for us. Has it degrown in this particular quarter? And going forward, you did mention that there were some repricing concerns that clients had. Have you faced any issues on that front?
Yeah, I'm reconfirming the order size, and there is no concern whatsoever on the repricing front. All our customers over the last 2 years have understood that we were offering our world-class products at ultra deep discounted prices, and we have just gone to them for making sure that we get we continue to run as a going concern. And they have appreciated that, and there is no concern whatsoever as far as our prices are concerned.
Okay, so there has been no price hike, Mr. Desai, because you did indicate that you've been raising prices earlier. That's why we wanted to understand if that has impacted any of the clients. And second, on the margins, did you give any wage hikes this time? Is that something that impacted margins for you? What is the outlook for FY25?
Yeah, we have obviously, as I mentioned, we have given more than industry wage hike, and that is how that is one reason because of which you have noticed a drop in margin from 27% to 15%, and we are confident that we will be able to recover back. In how much time, that as a policy we do not give guidance.
But will it see an improvement from Q1 levels? If you can give us a sense of that.
Certainly.
Okay, by how much? Is there any, will it be like 100 to 200 basis points increase? Will it be better than?
I would not be able to say anything. That will be
And what about revenue growth? It has seen a decline this time. Will you see an improvement in the other quarters? Will it be a growth this year the way you've seen in last fiscal year?
Certainly.
Okay. Mr. Desai, at the end of Q4, you had said that 20% of the clients with whom you have AMC contracts, it was still left to go ahead and do a repricing over there. So right now, are you saying that there was no higher repricing done with these particular clients?
Not yet in this particular quarter.
So what portion or what proportion of the AMC contracts are still left to be repriced?
Similar range, 20%.
Okay, so 20% of the total AMC contracts is still left to be repriced. What is the exact number of the order book currently, and what is the order pipeline?
Order pipeline I can talk about. We are is looking good, and we continue to have very good conversations with customers in at least 8 countries. Yeah, we are quite hopeful that we will be able to report some orders in coming quarters.
Okay, all right, Mr. Desai, thank you so much for joining us today and giving us all those details. So that's the word coming in from Nucleus Software. First quarter was impacted by higher than industry wage hikes, and that is something that impacted margins as well. They expect to recoup all of it in FY25. But with that, we'll take your leave on Midcap Radar today. Stay tuned, closing bell when we return. Markets have seen some recovery, but still it's a big cut on the major indices. Stay tuned.
Great way to celebrate our own 25th year with new milestones being achieved on the large street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and cnbctv18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
My wife, for instance, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually.
They're largely lower. The Japanese market, they look like they're in the bear territory.
I expect that we should be in a position to maintain our earlier guidance.
Markets are taking up the odds of Fed rate cuts very, very sharply higher.
All it's gone from is very expensive to somewhat expensive.
It's indicative of a 4% cut. The first rate's coming up, 400 points lower, 24,300 is where we are at.
We will probably try and see some correction as far as the inflation dynamics out there are concerned.
Post custom duty reduction, we see a lot of traction coming in for particularly gold jewelry.
Essentially, global factory output has come to a stall.
It's a full bear attack. Buyers are on a complete strike.
When US sneezes, everyone else catches a cold.
The mid-cap and the small-cap space seeing quite a bit of a sharper cut compared to the benchmark indices.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far. This is Closing Bell. We are coming to you half an hour early because, of course, the state of markets. Nifty still down 600 points. It's off the lows by quite a bit as well. But this is one of the rare occasions in the recent past, at least, where we started down and, we started 400 points lower. And as we approach the last 2 hours of trade, we're down even more. Usually there is a recovery by this point. We're coming to you from the CNBC TV18 Motilal Oswal Studios. I'm Prashant, with me, my colleagues Reema and Surabhi. Guys, hi.
Hi, good afternoon. What a day, right? I guess every once in a while the market does this just to remind all investors, traders, newbies, oldies that ultimately the market is supreme, right? So I guess they talk about risks in the market and the only risk is the one that you can't forecast or foresee. I don't think about 3 or 4 weeks back, I don't think we were discussing the US recession at all. And that's center stage now.
Yeah, absolutely. And actually, we were talking about a soft landing and
Goldilocks scenario and all of that.
I don't know where Goldilocks is.
She's run away.
But it's that's essentially what's going on. So there's a lot which we've been tracking through the course of the day, and we will continue to. But I think the reason why the market here is also recovering a little bit is essentially because U.S. futures have recovered. So about around 1 o'clock, Nasdaq futures were down 5%. Nasdaq futures right now are down about 3.17%. So there's about a 2% recovery coming through in US futures, which we should put out as an alert at the bottom. And that's the reason why here in India as well, I mean, actually, it's almost tick by tick that we've seen a recovery from the day's lowest point as well. I mean, actually, if you look at the the Nifty, the low is 23,893. Way below the budget day lows, and now we've clawed our way back up and we're at about 24,091. The low on the day of the budget was 24,074 or so. We'll continue to sort of bring in various aspects, but let's get some perspective in. We have Adrian Mowat now joining in, someone who's seen global markets and global cycles for a long time. Adrian, great to have you with us here on the program. Thanks very much for your time. Yeah, I mean, US recession, it's just come up upon us. There is, of course, the yen, which is so much of the talking. I think about 70% of the print space is now being taken up by what's happening with the yen. So where are we at? Is this the start of something, or is this just like one of those knee jerks which we see and the market moves on?
It's more You used the word recession, and we're starting to talk about the risk of a US recession. So why have we suddenly started talking about that? Well, I think there's been two data points. One has been a weak PMI, both in the US and globally, and the other one was the labor market data. So you've got job growth at 117,000, but people are increasingly highlighting that some of the seasonal adjustment may not be correct, and perhaps the labour market's even weaker than their decline from expectation of 200,000 job growths a month down to 100,000. And maybe the momentum is being lost in this economy and the risk of a recession is rising. But remember, we're talking about the risk of a recession when the Fed has interest rates at 5.25%. That's the highest level we've seen for almost 2 decades. So the Fed has got an awful lot of firepower if they decide that they need to help the economy. And if the Fed is going to move and cut rates, and we're now looking at the possibility that rates are down by a full 1% this year, with perhaps 2 cuts of 50 basis points each in the next couple of meetings, then equity markets are going to start to look ahead and think, right, okay, well, things are slowing down at the moment, but the central bank is responding. And perhaps some of these cyclicals, some of these non-tech stocks that haven't done well year to date, many have actually fallen, perhaps begin to perform well as the Fed provides help to an economy if this economy is really slowing down.
Adrian, morning, afternoon, and thank you for joining in. So on the subject of Fed, there are some who are now saying that the Fed has waited too long to cut interest rates. Would you concur with that?
I think the Fed has looked at the data, and the data as of now has been a headline inflation rate well above their 2% and a job market that's looked pretty robust. Now, we do know that monetary policy acts with a lag, and the tightening didn't seem to have slowed this economy down at the rate you would have thought it would have, considering that the tightening started in 2022. So, is the Fed a bit behind the curve? Maybe, but I'm not sure anyone else could have done much better.
Adrian, great to be listening into you. Yeah, take that point. I think it was somewhere in the middle of summer, May or June. That's when the data points started weakening on retail sales, consumer confidence, and we had the manufacturing PMI, which was quite bleak. And then finally, this jobs report. But to go back to that point, in terms of what happens from here on, you've seen this tape play out before in far sort of, I think, more difficult circumstances as well in the past. Now, if if the Fed starts cutting ahead of the next meeting, and if they start delivering these bazooka cuts, say 50 basis points suddenly, will that help the market, or will that in fact spark further panic? What do you forecast for the next couple of weeks?
It's a cut at the September meeting that's not that far away. It may feel like a long time away considering how quick markets reacting at the moment. And a cut in between meetings, no, I think that would be an incredibly negative signal to the market. It would suggest the Fed knows that things are much worse. I think it would be terrible for market confidence to get an intra-meeting cut. We've got a meeting in September. I think a decisive 50 basis point cut would be very appropriate and would help comfort markets.
Okay, great to get that view, because we had experts from Jefferies and JP Morgan earlier, and they said that maybe they'll cut even before September. So that's why we were wondering whether that will be actually, well received at all by the market, but you've made that clear. Just to go back to the point on Japan, so what's happening simultaneously is that you've got the US all set to cut, you've got Japan, hiking rates, the yen surging, and it seems to be compounding the whole carry trade situation. What have you made of what's happening there and this sort of the interlinkages between the markets?
So the yen had weakened to almost actually across 160 at one point. It was a good place to borrow. Rates are still zero, and the currency's been weakening. So we're seeing an unwind of that risk trade. Now, part of that unwind was through a catalyst from the central bank, with the Bank of Japan intervening. But I think it's all sort of worked well in terms of markets that were quite extended with the yen oversold, with US tech equities perhaps overbought. And you're just seeing an unwind of risk. And for the yen, I think it will probably overshoot, but then I think it will go back to being a relatively weak currency. I'm not a buyer that the Bank of Japan should be raising rates. I think domestic demand in Japan still remains very weak. I don't believe the Bank of Japan should take the risk of tightening policy at this point. So yen weakness, NASDAQ falling is about risk off. Probably has a bit further to run, but I see this as more a correction in what is still an uptrend in equity markets, and probably still a story of a relatively weak yen.
Right. Got that. So I have a couple of questions on this, Adrian. One, is this actually, there's no way to know, right? Anecdotally we get, when we speak with a lot of market participants, there is unwinding, etc. Do we have a sense of how large this carry is, the carry trade is?
We don't have any data on that. And, often, people don't need to publish what their positions are, particularly in markets like currency markets, where it's very much counterparty to counterparty. The price action will tell us where we are in the unwind. Unfortunately, there isn't any other evidence we can look at.
Okay, so let's say the interest rate is 0.25% in Japan, 5.5% in the US. Say the US gets to a recession. The expectation was that interest rates will fall by about 125 basis points this year. They'll cut by 125 in 2024. And some are saying that the terminal rate, which was supposed to be 3% or slightly above, if this is a recession, it can actually go even lower. The point is, has this rate differential come down enough for the yen to be for the yen to stabilize and stop being such a factor?
So, look, I think there are a couple of things we're talking about here. So, the central bank of the United States cares about the United States, and we can have a debate about what neutral policy is in the US, but I suspect it's somewhere between 2 to 3%. So if the Fed's concern moves to growth and employment, then we should expect the Fed to be cutting rates quite aggressively to move to at least neutral. And perhaps if the economy does go into recession, then they'll move below neutral interest rates. That would still give you a positive interest rate differential in favor of the dollar versus the yen. And I think what people will look at with regards to the yen is the robustness of domestic consumption, job creation in Japan, and not be fooled by an inflation rate that's positive primarily due to imported inflation rather than excess demand in the Japanese economy relative to its ability to supply that demand.
Absolutely. Point taken, Adrian. But, not 5% interest rate differential, right? 20 yen, USD JPY falling 20 yen with a 5% interest rate differential is massive, which is essentially what we've had. I think we've had that once in the last 20 years. I think the last one was 98, 99. A great chat as always, Adrian. Appreciate you joining us, and thank you very much. Sorry, you want to come in?
I think with the yen, remember that they've basically been at zero interest rates, and the Fed has been moving its interest rates. So,
absolutely. Thank you very much, Adrian. Great chat. Appreciate you joining in, and good conversation. 630 points lower is what we have on the Nifty. We're at about 24,100. Marico just released its first quarter numbers. The numbers were flashing just a while back. Mangalam is here with the fine print and how the numbers are looking. I think there's 4% volume growth. Mangalam, take it away.
Well, the reported numbers are largely in line with street expectations because, the company had given their first quarter update itself. So revenues of just shy of 2,700 crores, largely in line with street expectations of 2,675 crores. EBITDA 626 crores. What is the street working with? 631 crores. And net profit at 474 crores, mildly above street expectations of 462 crores as well. Volume growth of 4%, again, in line with 4 to 5% sort of guidance that the company had given. At the same time, the expectations of the street were of that itself. Gross margins at 52.9% is a big positive. Domestic revenue growing at 7.4% is another positive. And the company, while it's ramped up ad expenses year on year, there has been a slight moderation quarter on quarter, but that could largely be on, seasonality factors itself. What's good is the management commentary that has come in. They expect sectoral volume trends to sustain in the improving trajectory. In fact, they are gunning for robust revenue, volume-led growth going forward as well. In fact, they expect a gradual uptick in the growth of their core categories, as we can see at the bottom of the screen as well. Some updates coming in on their growth businesses, which is food and the digital premium personal care verticals. They expect this to be between 20 to 25% of growth rate going forward, with also food and personal care contributing over 25% of sales by FY 2027. Right now, that number is sub 20% itself. Domestic share of foods and premium personal care will expand to 25%. They're on course to deliver double-digit EBITDA margin in Beardo this year, and also a strong operational turnaround in some of the acquisitions that they've made, and expect the consolidated revenue as well as volume trend to continue to move upward, and that's a positive. That explains why the stock, it was already up before the numbers, given the tailwinds that we're seeing in the FMCG sector, but good performance, even better commentary has led the stock even further higher, even in a wobbly market.
Okay, thank you very much for that. Let's get to the other important corporate update. State-owned power finance lender PFC faces corporate governance concerns from independent directors for loans given to the SP Group. Nisha joins in with the exclusive details. Nisha.
Thanks for that. Yes, sources who are directly involved in this particular matter have shared with CNBCTV18 that the independent directors of Power Finance Corporation have raised concerns over the company's loan given to Shapoorji Pallonji Group. Now, the directors have raised questions on the loan given to infrastructure business, especially being non-core to PFC, which is purely an energy or a power sector lender. Directors are also concerned as the loan was given to avert default to foreign lenders by SP Group, is what we gather from sources with direct knowledge. It is to be noted that tomorrow is PFC's board meeting on results, and we do gather that some of the independent directors who have raised concerns are likely to raise this particular issue in the board meet of PFC. We also gather that PFC had recently approved a loan of close to 20,000 crore rupees for the infra segment of Shapoorji Pallonji Group. And we are also privy to the loan terms, which are also the terms which the independent directors have raised questions on. First, the loan is backed by a collateral of a land parcel in Mumbai, and it covers only the collateral exposure of 1.75 times of the loan amount. Earlier, they were considering Tata Sons shares owned by SP Group as collateral, which is not the case right now. And also, the loan term includes a moratorium on the principal payment by SP Group for 4 years. All these questions have been posed to Power Finance Corporation by CNBCTV18, and they have not offered any comment on this. Tomorrow is going to be crucial on independent directors really raising these corporate governance concerns on a specific loan approval to Shapoorji Pallonji Group by Power Finance Corporation is what we gather.
Okay, all right, Nisha, we got that. Thank you very much for that story. Need to take a break on that note. We'll come back on the other side and bring in Rohit Srivastava. Let's put a technical spin on this as well. With markets collapsing the way they are, how should you be looking at your trades, your near-term investments? We get some conversations going with Rohit in just a bit.
And the ability to without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or something, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked, my kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very, very helpful as you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's just a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, so I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my, clan to go to university. So when he first came to campus, and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be X, Y, or Z, or even executive director, I don't think even I knew what the International Monetary Fund was.
I came here in 1991. 1991, that was my first year of college. I came here for Inter-IIT. So I remember this campus especially because this is one thing that...
Welcome back. So we are still looking at a cut of about 600 odd points, 630 to be precise. 24,000 is being held on to. The only green in the market has been few names from the FMCG space. So your Lever, Nestle, Britannia, Tata Consumer. That's about it. The rest of the market continues to reel under pressure. Rohit Srivastava, as promised, is with us. Rohit, every once in a while, when I think people think that the bulls are invincible, the market comes up with the lesson. It's been a pretty harsh one over the last, I think, 2 trading sessions. what have you made of the sell-off? And at a time like this, I mean, should you just go with, let's go by that traditional wisdom that's swept the market for the last 12 months? Or is it better to stand back and let the global picture settle?
No, I think it's time to step in. Today is an oversold market. We use this proprietary indicator known as the momentum swing, which is there on our Strike platform, and it's reading at 2% right now. What that means is that 98% of stocks are showing negative momentum. So when we actually see 98% of stocks showing negative momentum, that's the day to consider buying. All you need to do is just be watchful of where the downward momentum wanes a little bit. We are seeing that now. I think at the end of the day, slight bounce from the lows, initial signs of reversal. We may see some more tomorrow, and so this is the time really to step in, because when there's, like they say, when there's blood on the street, it's time to get in, and you have to always like it if you're on the bullish side to get these moments for the good trades, because the investors will remain buy on hold. We haven't really broken either the 40-day, 50-day averages to say that the investment environment has been tarnished. So it's essentially the traders who take a hit in this kind of volatility. But the volatility provides us with this opportunity. So I think we are in that extreme oversold, down to some 12 or something now. That's pretty low, compared to even us. So not a level at which you would be selling Japan.
So let's get straight to the point then, Rohit. If the markets are oversold and this is a good time to come in and buy, what's a relatively space, sector or a theme or a stocks that you would recommend to buy now?
No, so there's safe and there is trend, right? If the trend is not broken, you'd want to be in the strongest areas, and then there is the safe areas. I think the safety has already been proven in places like pharma and FMCG, which are probably down the least today. So that's always the defense. But I do prefer pharma over FMCG. So I would say having some pharma stocks, which are also one of the outperforming sectors of the last 6-8 months, is good on the defensive side. But on the other side, you go back to the winning sectors, whether they are, PSU banks, but I would also say private banks, because private banks, from their period of underperformance, if I just look at the Bank Nifty or the Nifty Financial Services Index, they all broke out post the elections from the 1-year congestion zone, and that pretty much signals that financials are on their comeback as things start improving in the next 6 to 8 months, and probably people will front run that idea. And now with the whole idea that interest rates are going to likely come down, something I've been saying for a while, is now more obvious to the street, then you immediately look at interest rate sensitives. So you start with banking, then you will go on to the auto sector, you will go on to the realty sector, and lastly, you would also not miss out on metals that typically benefit in the end from a weak dollar, strong bond market environment.
Got that. Rohit, you're also a big watcher on, apart from the fact that, very quickly things have gotten to very oversold, like for example, RSI on the yen, etc. How is the cycle? How would you assess the strength of the upcycle? And it's possible that we get a bit of a sharper slowdown in the US, right? So then some of this stuff will continue to play out. Maybe not the yen, but if the US recession talk continues. So then how does it all pan out?
So there's contradictory data when you actually look at the US. There have been some interesting tweets about it. If you just go back 1 week, you had, GDP data, which was actually showing, over 2% growth. So now you have non-farm payrolls, which are showing, possibly, job losses and an unemployment rate going up. And then you'll go and look at the PMIs, which are still at the higher side. So what should we really go by at this point of time? So there are clearly two camps on this. There's the camp that things will go through or stabilize, and then there's the camp that thinks no, a recession has to happen. I'm probably in the first camp, and there's a reason for this. And the reason is that usually when you're in a deflationary environment, like I think everybody's watched the yield curve also over the last 3 recessions, and there are a lot of theories as to why some things have to play out in a particular pattern. I think this pattern was in a deflationary period when you didn't have an inflation problem. So typically when bonds sold off, money was going into equity. So interest rates would be rising as equities would keep rising. The opposite would happen then in a recessionary environment where stocks would fall and money would go into bonds. So there was basically an inverse correlation between the two. Now what we are seeing is more of a direct correlation, which means that as yields go down and bonds rally, stocks also rally together. And this is because of the inflationary environment. So in an inflationary environment, interest rates go up when there's inflation, bonds fall, stocks fall, and you end up getting a scare, right? That is what we saw in 2022-23. Since then, bond yields have been coming off, initially very, very slowly, which is why the recession talk didn't play out or people didn't get so scared. They thought that, yeah, yields are falling, but when they really fall sharply, we are going to get that recession. But I think in an inflationary environment, yields falling essentially a sign that the inflationary pressure is waning. And as interest rates get cut, you see stocks go up further. So you'll actually see more of a direct correlation, which is what we are seeing, I think, since 22, a more direct correlation between bonds and stocks. It may not have been true for the last 2 days because this is where the scare spread with the yen carry trade and so on. But that's only 2 days, right? Taking 2 years into account, there's one correlation, and then there's 2 days where people just got scared that, are we in the worst case scenario? But as rates actually start getting cut, which is now the expectation that people are building in, I sense equities will actually rally and interest rate sensitive sectors do well. In fact, even if you look at the US, so just go back 2 weeks back, you'll see there was a rotation out of tech stocks right into the Russell and the US banking index, right? Both of them made new 52-week highs. And that was the rotation again, based on the same idea that, somewhere falling rates are going to spur interest into these sectors. So somebody started to front run those trades. And I think that's what will happen eventually. Once we are past this short-term knee-jerk reaction, as I might call it, you will see that rotation into many other sectors participating, which are impacted by rates.
Rohit, good explanation. Thank you very much for your time. As Rohit said, Rohit's view is that you should step in and start to nibble, right? If you're trading, if you're holding, if you're an investor, then you're holding on and you're looking at, of course, a little bit of damage to the portfolios. But if you're trading, Rohit believes that markets are oversold after 2 days of sharp selling. So 300 points on Friday, and actually, we've come off a little bit more, 670 points right now on the Nifty today. We'll take a break. We'll have Deepan Mehta of Elixir Equities join in on the other side. We continue the conversation on markets, and we'll get you a couple of stories as well. Stay tuned.
The women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like, I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do, and I think coming back to this campus...
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya, and what, you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have
I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CI, what I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation, and the quality of talent and the kind of ownership that that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBC TV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBC TV18 Motilal Oswal Budget Headquarters. Welcome back. The Nifty is at 24,050. It's been hovering around this range for the last 2 hours or so, down 670 points on the Nifty. But let's get to some action from Deal Street. Now, our colleague Rachna has gathered from sources about a deal brewing between Aster DM Healthcare and Blackstone. Rachna, it's over to you for more details.
Right, well, yes, what we're picking up from our sources that Aster DM is in advanced talks with Blackstone for what could be the biggest deal in the hospital space. Now, what we've gathered is Blackstone, that had acquired about 72% stake in Care Hospitals, is looking to merge with Aster DM and form a new entity which will be run by the promoters of Aster DM and working professionals from Blackstone as well as Care Hospitals. This would, together in the newly formed entity, the total bed capacity would be at 10,000 as Aster DM Healthcare has bed capacity of 5,000 currently and Care has roughly about 5,000. So together that would come to about 10,000, making them second, if not the first player in the hospital space after Apollo. But talking about the deal, it gets more interesting because this is not a cash deal, it's a share swap, which means with this deal, Aster DM Healthcare promoters will have stake in the newly formed entity, which will be merged with Care Hospitals, and in return, Blackstone will end up having stake in Aster DM Healthcare. Now, this would also mean, now let's look at what this means for the promoters of Aster DM Healthcare, which is Azad Mopin and family, who hold about 42% of stake in Aster DM Healthcare currently. It would mean that they would end up having stake in the newly formed entity, which would result in them cutting their stake in Aster DM Healthcare and giving that stake out to Blackstone. So this is definitely going to be one of the biggest deals in the hospital space, and we'll be looking out for it. In the meantime, we wrote to the companies, but we haven't received a response yet.
Okay, all right, Rachna, thank you very much for that. So there's a big deal if it fructifies in the hospital space. Well, let's move on to another story. This is LIC we are talking about. And we understand that LIC has got 5 priorities it is set on in an agreement with DIPAM, with the government of India, essentially. 5 areas of improvement that LIC is working on. Yash is joining in with details. Yash, over to you.
Well, in the last 1 year, Prashant, we've seen a 50% increase as far as LIC stock price is concerned. That's been acknowledged by institutional investors as well as retail investors. And that has been a result of many regulatory changes which have become supportive. At the same time, changes as far as the business at LIC is concerned. Now, what we've been given to understand is that LIC, along with Government of India, DIPAM, which is the Department of Investment and Public Asset Management, has formed a 5-point strategy when it comes to the kind of improvements in these 5 areas which the government wants to see from LIC's end. LIC is expected to submit a regular report with the government in terms of development progress in these 5 areas. I'll quickly take you through these 5 points which have been spelled out by the government for LIC. First one is its platform DIVE, which is digital innovation and value enhancement. What is this platform expected to do? It's expected to completely digitize processes at LIC, right from onboarding of policyholders to servicing of policies to claims management. It is also expected to increase digital sales, which are close to negligible points at LIC right now. In FY24, digital mix for for LIC just stood at about 0.15%. Less than 1% of the new business premium for LIC came through digital channels. So that is expected to get some push because of this new platform. The second one is divestment of real estate and non-core assets. LIC is the third largest real estate owner in the country. Its properties are expected to be between 50 to 60,000 crore rupees. That is expected to see some divestment from the company's end and raising of funds. Also, some non-core assets are expected to be divested. The third one is agency transformation project. LIC recently appointed A.T. Karne for undertaking a digital transformation project. Essentially, this will include training its large agency force to adopt the digital technology which it takes through the DIVE platform. Also, this will increase, the per agent productivity for LIC. So that will be important. The fourth one is on focus on product mix. LIC's focus has been to increase the non-par sales for itself. That's at 18% of the total annualized premium equivalent as of fourth quarter. The management has said that for FY25, that number is expected to increase more than 20%. So that is one area of focus for LIC, which will also increase margins for the company. And the fifth and the final one is growth in the market share for LIC. LIC has gained 260 basis points of market share in the total business, but so far that has largely been driven by the group business which it undertakes. Now the focus will be on growing its market share in the individual business as well. These are the 5 points. The progress report expected to be submitted by LIC with the government on a regular basis.
Thank you very much for that. Dipan Mehta is now joining in. Dipan, LIC is a stock that you've always liked, and now there seems to be an action plan to divest its non-core real estate, increase the margins, look at focusing on upping its market share. LIC is great if you got in at a lower price, but at current levels, what would you recommend?
Yeah, Rima, good afternoon and thank you for having me on your show. Disclosure, we and our clients are investing in LIC, and I still believe in the LIC story. If such value unlocking is going to take place, that was not what was factored in by me. My basic premise of suggesting LIC as a good recommendation was on account of its attractive valuation, where it is still at or below its adjusted enterprise value. And a lot of the enterprise value has not yet got captured in the stock prices, which have moved up. So if this particular process were to take place and real estate was to get revalued and unlocked, then that would mean even further upsides. And despite so much of competition, LIC still remains a very, very significant player. It has been able to maintain or increase its market share, which is quite, I would say, impressive. So we remain positive on LIC, and where flavor of the season is PSU, I think this is one PSU which certainly has very good potential to go up. Having said that, we are invested, so our views are to that extent a bit biased.
The number one volume traded stock right now is PCBL, Philips Carbon Black, once again. It's up, I think it's up 30% from the time that we did that interview with Sajeev Goenka. And that's a big mover, almost 400 rupees coming on for Philips Carbon Black. Marico is up 1%, Shakti Pumps is up 5%, there is Devyani which is up 5%, lots of movers now. Sera is up 4%, Lal Pathlabs is up 2%, there's what else? I mean, actually this is it. This is the big volume-led gains which are, NCL India is up about 4% or so as well. But that's about it. Then you got to go down, but volumes are a bit lacking at this stage. Deepan, what have you done today in terms of any actionables?
No, nothing at all, Prashant, just waiting. So many times we have called for a correction and I've been very cautious on the market, but even on bad news, the market corrects for a few hours and then recovers its lost ground. I don't know whether this time around it is different, but if it is so, then I'm waiting for the very important figure of 22,500 Nifty before I start investing in the stocks which are on my list. So the importance of 22,500, of course, is the 10% correction from 25,000. So 10% correction and beyond that maybe are good levels, especially for companies which are not going to be impacted so much by a slowing economy if and when that takes place.
Deepan, so you still think, you're still holding out for 22,500? You still think it's going to happen?
I don't know. I mean, time will tell, but a 10% correction, is it too much to expect? I mean, I don't...
in a post-COVID market, it's a new normal that I don't think any of us has seen before, right? So therefore the question, but otherwise, absolutely not. I mean, a 10% correction is usually termed quite healthy.
We pre-COVID investors and traders have the baggage that markets can 10%.
Yes.
But post-COVID traders don't have that baggage, so they can buy fearlessly.
I agree. I mean, sometimes we do become hostages of just the wisdoms of the past, right? But I don't think maybe that's not such a bad thing, because I think this is a very interesting phase that the market is in. No one has seen a time correction, the post-COVID investors, or a massive price drop. So let's see how this one plays out. But just to go back to brass tacks, to go back to numbers, for instance, Thermax came out, stocks under a lot of pressure. So just any thoughts over there? Another stock is Samvardhana Motherson. I don't know if in the midst of all this noise, whether you had a chance to look at the corporate development there. I think spending about 230 crores because they want to increase their stake in one of their subsidiaries. I don't know if it's that or something else, because this stock has fallen quite dramatically today. Any thoughts?
No, I think it's corrected because of overall, if the global economy starts to slow down and car sales come under pressure, then certainly the business model is going to get affected, because a lot of the sales are global in nature. And in fact, this particular transaction which they have done is pretty small. See, the company has had a fabulous track record in acquiring stressed out assets overseas, turning them around, making them more productive. But the size also is massive. And I don't know whether they can get such many more such large acquisitions to keep on growing. At the same time, I think slowing sales across the globe will impact their volume. So they're sitting on good order book position, but end of the day, the volumes are to increase at the OEM level for them to start booking sales, and that may be under a bit of a pressure, looking at the way the news is coming on the macroeconomic front.
By the way, Devyani International, the owner of KFC, Costa Coffee, Pizza Hut, has reported good numbers. Numbers came out earlier today, a revenue growth of about 44%. At the bottom line, the company's turned around from a loss of 1.5 crore in Q1 of FY24. This quarter, they've clocked in a profit of close to about 30 odd crores. So pretty good improvement in the stock in a weak market, is up close to about 3.5%. Dipan, QSRs is still a no-no. Is there anything in Devyani International that you would want to take as a trend, that things may be on the side, on the mend?
See, Rima, it's again a company in which we are invested in, so disclosure from that point of view. And I'm sorry, I haven't gone to the results in detail, but they've done a very big acquisition. I think it was in one of the Thailand or something. So I don't know whether those numbers have got captured, which is why the numbers reported are so impressive, but I need to get more granular about it. But I'm very positive on the long-term prospects, 3 to 5 year prospects of a QSR industry. And these stocks are always going to trade expensive. They are the new FMCG, according to me, and they have a great runway for growth. And we like particularly Devyani in particular, because it rides 3 brands, not like Jubilant, which has only got one particular brand. And I think some of the other brands like KFC, I think there the penetration levels are relatively lower than the pizza business.
Okay, that is Devyani. That's important development beyond markets as well. A lot of violence in Bangladesh, very unfortunate instance. And it seems that the Bangladesh Prime Minister Sheikh Hasina has resigned, and apparently reports are saying that she could have actually fled the country. So beyond markets, there's a lot of other political news in the works as well in our neighborhood, and then of course in the Middle East. But back to the market now. So one area where everybody is looking is FMCG, Dipan, FMCG pharma, right? Now, again, if someone is looking to buy in now, what should be a realistic expectation? Because let's face it, these are not companies that are delivering 10, 12, 15% growth. Within this pack, what would be your preferred pick, and how much is the portfolio weight or allocation that you would give to some of these perceived safe havens like FMCG and pharma?
So to be an FMCG, you need to get a bit more, I think, creative and innovative, and not go for the typical FMCG stocks like the Nestle's and the Dabur and the HULs, the erstwhile giants. The real play in FMCGs and stocks like maybe like a Bikaji or a Varun Beverages or some of the other smaller companies. I thought even Zydus Wellness came with a good set of numbers. So you need to find the specific niches within FMCG which are not mature, where there's a good runway for growth and valuations are reasonable. And that's where I think you'll find the winners. I think just buying the HUL, Dabur, Nestle, Marico is not going to create any great wealth. Sure, they'll protect your portfolio in bad times. When there's a bear market, you won't see as much as a drop in those values. But then, as an investor, you were looking for growth businesses, and these are no longer growth businesses. And you could add ITC to that list as well.
Okay, all right, Deepan, we'll leave it there. Thank you very much for your time. Great speaking with you as always. Appreciate it here on CNBC TV18. So, Deepan Mehta with perspective, 600 points lower, which means that it's a bit of a, we were down about 670, I think, and there's a bit of a recovery, which is once again seemingly set in as we approach the last 30-40 minutes of trade. So, 24,100 odd. We take a break. We are back. We'll have Devina Mehra from First Global join in, along with Dinshaw Irani from Helios Mutual Fund on the other side. Stay tuned.
The Indian markets have not just grown, they've broken several records in the last 25 years. India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Award.
Okay, welcome back. You got the market down 600 points and we're about 24,100. It's been, a red day. Although I have to say that compared to some of the other sort of regional markets in Asia, even in Europe, I mean, it's at par or maybe lesser, 2.5% cut today on the Nifty. Dinshaw Irani is with us from Helios Mutual Fund and Devina Mehra joins us from First Global. Thank you very much, both of you, Dinshaw and Devina. Great to have you guys on the program. So, Dinshaw, if we can start by asking you, what are the thoughts at Helios today on what's happening and what is the intel from Helios about what's going on and what is likely to happen from here?
So, Prashant, very good afternoon to you, your viewers and your team.
and thank you for having me on your show. So here's the thing, Prashant. In fact, after March, so basically, what we've been calling out is that the markets are not respecting the fundamentals. Okay, that was the first thing that we called out earlier. From March onwards, the index earnings, the broader indices earnings have been cut by almost 5%. And what did the market do? It was up 11% till Thursday, I believe. So that's how it was. And in fact, June quarter again, the earnings haven't been that great. At best, it's been flat. If you take out the financials, it's negative earnings growth, right? So obviously, valuations is not the only reasons why the market should correct. They were waiting for a negative trigger, and I think the trigger came by way of the yen carry. I mean, 25 bips hike in the interest rates being increased to 25 bips by BOJ is not a small deal at all. I mean, the last time they did that was in 2007. It took almost 7-8 months for Lehman to collapse. So you never know how these winds are blowing after this kind of a up move by the BOJ as such. So basically, this is the trigger that one was waiting for. I'm not calling out a bear market at all. My feeling is it's a correction in the bull market. But the fact is that these corrections can be very savage. And our feel is that this year itself, I mean, this particular calendar year itself, is going to be very volatile and choppy because they're going to be crosswinds all across the globe going forward. So one has to be very careful. And in fact, that's why you'll see that our portfolios are more or less large cap heavy as such. And we're fairly conservative towards the mid caps. We definitely, I mean, away from the mid caps and small caps, whatever new ideas we're finding out, we are investing in those with obviously where the valuations are appealing.
Devina, come in here. What are your thoughts on what we've seen so far, and what's your sense? Beginning something here, or you think it's just a bit of a knee-jerk reaction?
Actually, the reaction, the view is not very different from what I have said on your shows over the last couple of months, which was that in the shorter term, we were expecting some sort of volatility and correction. However, a 1 to 2 year view was positive. So that was broadly what I've been saying for a while. Of course, we've been fully or partly hedged from March. But as I said, even at that time, that while some volatility was expected, it wasn't as if that I was predicting a major crash in the mainstream indices on a sustained basis. Because of that, we were never in cash, so we were always fully invested. Up until the election results, we were fully hedged, and after that, we've been partly hedged. So, that's the way to play it. To go into cash is only when you expect for sure that more or less a crash is going to happen, which is what we expected in early March 2020 before the COVID crash. But that sort of situation doesn't come that often. And in terms of the orientation, not that different from what Dinshaw said and what I have said in the past, that we had cut back very drastically on small caps for the last few quarters itself, even though we knew that in the short term it would hurt relative performance. So the under 5,000 crore companies where we normally have 14, 15, 13 in that range, sometimes 20%, we've been at 5-6% of our portfolio. So as low as that. So we've again been quite skewed towards the large caps because the small caps is, as a category, is where risk lies and where risk management is impossible because neither do stop losses work because those stocks, when they fall like a stone. Yes, there are no exits, nor can you hedge them because the only hedge available is a Nifty put, which doesn't move along with the small caps. So those are the, those and other frothy areas, that sudden industries that take off and where there are a lot of thematic funds being launched. Typically, you can take that as a negative indicator that whichever category in terms of small cap, large cap, etc., or industries or themes where there are a number of funds being launched, that's almost always close to the peak of that. But having said that, on a relative basis, India still looks better than most of the world for sure. And I am laughing at all the explainers of the yen carry trade because, as John Kenneth Galbraith said, that financial markets forget history and therefore the bubble pattern just repeats So the yen trade carries on till Monday it bursts, and that has happened multiple times right from the time it was the trigger for the Asian crisis, or one of the triggers for the Asian crisis in the late 90s, and then another almost 10 years later, 9 years later. So this is one more time when the yen carry trade has exploded.
So Devina, are you a believer that a recession is coming in the US? Because I think there was one more rule, that SAHM rule, which got triggered today. And it's apparently been giving, the right call since 1965. So are you a believer in that, that the US is entering into a recession, a hard landing?
It's difficult to say just now, because if you read the daily commentaries for whole of last week, again this is like cause for some amusement for me, because on Wednesday after the FOMC meeting the markets rallied, and everybody had one nice little explanation as to why that rally was justified. Then Thursday, Friday, when the markets fell again, all the commentators, all the newsletters, all the press had one nice little story about why that had to happen. So this is, as I often say, the exact same set of data and circumstances can be used to justify a market rise or a market fall. Interest rates getting cut, wow, this is great for the market. Interest rates not getting cut, that means that the economy is doing so well. So it is, therefore also the market going up is justified. So it is all, these are all explanations, and unfortunately, I would love it if that were not the case. In most macro indicators, there aren't enough data points to say that that something which has happened in the past will repeat, because there aren't enough data points for them to be statistically significant and for all other things to be equal. And the first time you're really finding a slowdown in the U.S. labor market. So whether it goes into an actual hard landing, it doesn't seem exactly on the cards just now, because the rate cuts are, I think, not that far off, and it's not as if that there is anything disastrous which has happened on the labor market. It is just that it was not so very buoyant, and now it's not so buoyant. So I'm not very negative on the U.S. economy as a whole.
Rima, the rule that you're talking about is the SAM rule.
SAM rule, yeah.
So she's an economist. She is an economist. She's alive, and she used to be with the Fed, and that's where the rule comes from. Yeah. And according to that one, of course, we perhaps may already be in a recession, shallow. It is all kinds, right? So, Dinshaw, come in on what you're doing and what you would be doing, what are the sector preferences, etc.
So today, Prashant, actually going into the budget, we had raised some cash, and fortunately we didn't invest that cash even after the budget. So we're pretty stable there. I don't think we're in a rush to invest that cash, by the way. We're keeping that cash aside for some untoward event if that happens at all. Plus, what we're doing is that in financials, we continue to be overweight. Frankly, the numbers also are looking okay. They're not that, given the fact that the way things are today, they are looking far better than others who are reporting in the market. So that, and we're not definitely running into safety. We're not going to do that, because we don't think you want to park your money in 60, 70 PE stocks with growth rates of 7-8% because I'm sure our economy on a real term does, on a nominal terms does much better than that. So that's why we won't be doing that as such. Consumer is another space that we are pretty overweight on, but not in the FMCG space, like QSRs and all is where we are pretty bullish on. And obviously tourism remains one of our focus areas. Looking at the way it was, we didn't do it proactively, but what we had done earlier was taken an approval for a large cap, mid cap fund, and we are in the process of timing that entry as such. So let's see how that goes. I think that was pure luck on our part, I suppose, getting the approvals in place at the right time.
Dinshaw, we haven't seen a correction in excess of more than 10%. We've seen the markets fall 3-4% in the last many months. And even today, from our recent high or all-time high of more than 25,000, it's a fall of about 4%. But do you think the current global situation can precipitate a correction of more than 10%?
One thing, Rima, that 4% is for the indices, right? If you look at the components within, or in the small cap and mid cap space, I'm sure you'll see quite a few stocks which are down 20-30% from what they were when the indices were high. So this hides a lot, right? So, and secondly, as I said, we're not calling out a bear market at all. I don't think India, if at all, loses its shirt, the others are going to move around without their clothes, I suppose. But that's not going to happen, because India is probably one of the only markets which is going to show a growth going forward. So that way we are fairly insulated. But the fact is that equity as a class may become unattractive going forward. And that's why we believe that you're going to see a very choppy and volatile market going into this year itself. I mean, in fact, probably even if the Fed cuts rates, I don't think that's going to impact equities in a big way as such. So that's why we are where we are today.
Okay, we'll leave it there. Thank you very much for joining us, both of you, Dinshaw and Devina. Appreciate your time here on CNBC TV18, and we continue to sort of, lean on both of you over the next couple of days as we get through this sort of bit of a down phase in the markets as well. So 24,075 is where the Nifty is now trading at. We'll take a quick commercial break here. We'll come back. As always, we'll get you a quick check on what's happening in dealing rooms on D Street Chatter. And after that, we'll get you some trading ideas as well. Stay tuned.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. And what a great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty, from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicine.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and cnbctv18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
Okay, I mean, I think there is another leg down. So it was looking like we'd be down about 600. It's down 675 points now. Nimesh is joining in to run us through what he's picking up from dealing rooms. People he's been speaking with. Nimesh, take it away.
Hi, Prashant. It's a global risk-off and India is facing a brunt of it. It's largely in the broader market stock because that's where the mid-cap and small-cap had relatively outperformed in the last many weeks, and hence you're seeing more pressure in the broader market stocks today. Every pullback in the Nifty got sold into, and that's largely because I understand there is a very large sell basket at a leading FIs. So it looks like some bit of selling pressure is there from the larger FIs as well in today's market. Financials has been a big drag. The index is down nearly 2.5%, but within that it's the NBFCs which have fallen more than the private banks. But as far as flows are concerned, that's largely in the private bank and some PSU bank stocks. So that's where the supply seems to be from the larger FIs. I guess there are some, from an India point of view, a couple of indicators to watch out for. The PCR is close to 0.73, 0.74. Normally we've seen the markets tend to bottom out around 0.65 level. So that is one big cue to watch out for. And also the India VIX is something to track very closely. But globally, there are some reports now and maybe indication as well that maybe central banks will come into action. In fact, Chris Wood wrote in his note as well in today morning that maybe an intra-meeting cut by the Fed is very much likely. So any action from central bank will be very important to watch out for. But from a domestic Q point of view, watch out for the PCI, which is close to turning to bottom, and also the India VIX.
Things are getting a little oversold. Nimesh, in terms of specific stocks, what's on your list?
Well, Prashant, on a down day, you normally see a lot of pressure in the high beta names. So the first stock is GLF, been a rank outperformer after the quarter one earnings, but now it looks like some bit of selling pressure has emerged. So there is selling pressure and expect high delivery volumes in DLF today. The second stock is M&M Finance. This is interesting. They gave out a monthly update and that was not very strong. So on back of that, you've seen a bit of selling pressure. And interestingly, Morgan Stanley has put out a tactical sell as well on M&M Finance at these levels. So that's why that stock is under pressure today. A couple of names where there is some small delivery-based buying as well. Granules and Sun Pharma both stands out. Well, the stocks are under pressure, largely on back of overall sell-off, but there is accumulation happening in these levels, though small in quantity, but there is delivery-based buying in these two names at larger FIs. And the last name is Bajaj Consumer. That stock is under pressure today, but there is a large block, nearly 2% equity got changed hands. So looks like some disclosures will be quite interesting as far as Bajaj Consumer is concerned.
Okay, thank you very much for that. Airtel will be reporting numbers typically around 4:30 p.m. And this is what we're expecting, about a 2.5% increase in the company's consolidated revenues. Margins are likely to remain stable. Profits could show a big jump, but in the prior quarter, the profits had fallen by close to about 15%. Now, Airtel Africa has already reported numbers. And for the India business, this time, it could be a bit of a non-event because the tariff hike took place about a month back, and that's going to be effective in Q2. So the bulk of that benefit of the 15% tariff hike taken by the industry will boost the company's India business mobile performance in Q2 and Q3 as the benefits flow through. So in that context, this quarter assumes lesser of an importance. But we're still working with about a 3% increase in the company's top line for the India mobile business. Again, margins are likely to remain stable in the absence of the large tariff hike. ARPUs for the company have been slowly, steadily inching up as premiumization takes place. Subscribers move from 2G to 4G, or some people are moving to higher value plans. So ARPUs are likely to inch up, but again, not by a whole lot. According to our poll, ARPUs should go up from 209 to about 212, and the subscriber increase, particularly 5G, will be fairly strong. So that's the expectation from Bharti Airtel this time. Airtel Africa numbers, remember, are already out. So the street largely focuses on the India mobile business and the enterprise business. Honeywell Automation's numbers are on your screen. It's a tepid 3% top-line growth, but the EBITDA performance increase has been close to about 28%. The stock is down nearly about 2%, initially skyrocketing and moving up, and then perhaps the 3% revenue growth has dampened some of the expectations. Anand Tandon is now with us on the show. Anand, wanted to get your thoughts on Marico. Numbers are in line, but then there is that Bangladesh element also. Bangladesh contributes about 12% to its overall revenues. To its international business, it contributes about 40-45%. With the social unrest, turmoil taking place in Bangladesh, is it going to be a big impact on Marico? And is that a consideration at all?
So while I wouldn't want to specifically comment only on a company, the fact is obviously, as you pointed out, there is significant or at least substantial revenue coming from that part of the world, and any political issues obviously will make a difference. But the more fundamental issue is that it is the attempt at Marico always has been to get out from the commodity side of the business into a more a higher value add part, and the commodity side is under significant pressure because of the fact that a whole lot of new players have also come in terms of hair oil and in specific coconut hair oil, etc. So from that perspective also, that is going to be a bit of a challenge, because premiumization, while it's a nice word, it is actually what you're really asking is for people to pay more for the same thing repackaged with a little bit of extra pizzazz, just so that you can pay a higher amount. In a situation where we are currently, where at the lower end of the curve, you're not getting too much of consumer demand, that is unlikely to make a major dent. Already the volume growths are fairly anemical. The price growth is essentially where you're going to make your money. That's not going to be happening. So right now, commoditized type players, especially in the FMCG space, will go through a slightly tougher time, I would imagine.
Tata Motors was weak even last week after they came out with their numbers and the JLR volume update or the expectations for Q2 and Q3. And now with the concerns about global growth slowing down, has further dampened Tata Motors, down 7.5%. Is Tata Motors attractive after this near 10% fall in 3-4 days, or is it an avoid?
Again, you're asking for specific recommendations, which I can't do. But if you were to look at the sector as a whole, most of Tata Motors' revenue growths are coming from Land Rover sales. And, while there are some new products in the pipeline, the international market for SUVs and higher-end cars is actually pretty bad. If you see Stellantis' number, which they reported, the US market especially was extremely weak. And most of the other players are also not reporting anything great in terms of volume increases in those markets. So with that as a background, the only thing that seems to be firing for Tata Motors at this stage is the domestic CV. And that market is not necessarily the one that is going to make a major change in the numbers, but on the domestic side, definitely it is a good part. The split in the businesses is a little more attractive. And the other thing that has been driving the stock is the fact that they think that they'll be able to get out of debt and become net cash positive in the next couple of in the next few quarters. So to that extent, it is a little more attractive. But if you were to look at an international comparison, which is what I believe you should do for Tata Motors, you have a Stellantis at three times or less PE. Of course, the E may not be growing there, but you have Tata Motors at, let's say, 7 or 8. So which makes it quite expensive compared to the rest of its peer group.
Okay, not getting into specific stocks then, Anand, what have you made of the global rout today and the fall that we're seeing in the Indian markets? What's the advice to retail shareholders today?
Well, from a trading point of view, I mean, obviously, sharp fall like the one that we've seen will obviously mean that, you may want to try and pitch for it, especially, for example, in the global markets. The Nikkei fall has been dramatic. I think somebody else on your channel was mentioning that it is now trading at 12 PE and its own historical anemical. Its performance has been nothing to talk about. It is now at a level which it was as the last 4 years moving average kind of thing, and at a valuation which is against a 14 times, it is now 20% lower than that. So valuation wise, also it is looking quite cheap. So the international markets are looking a little more interesting. The domestic market has hardly corrected. A 4% fall after such a major rise is nothing much.
Okay, got that. The market here for now down about 660 odd points or so. Anand, you want to listen into the next one. Indigo, the airline, has announced business class seats from November, and these will be available for 12 routes, and bookings will open on the 6th of August. My colleague Danish Anand caught up with Rahul Bhatia, co-founder of the airline, beginning by asking him whether the airline is on its way to becoming, sort of a full-service airline with business class across all routes eventually. Listen in.
I'll let customers make that judgment.
But from here on, like next 5 years, 10 years down the line, how big will Indigo become?
Well, I think the presentations today said that by 2030 we expect the airline to double in size. And when I say size, it's just not in terms of revenue, but the footprint that we will expand into with the XLRs. We'll broaden our footprint starting next year, and then in 2027 with the launch of the 350s, we'll go further.
So a couple of months back, we saw there was a stake sale by Interglobe, and you mentioned on the stage that you're here to stay. So could you elaborate on that?
No, because when we did the sell down, there was some speculation on our long-term commitment or longer-term commitment to the airline, and I just felt today was an opportunity to let the world know that we are here to stay. Like I said, it was a personal itch back in the 1990s to go do an airline, and that itch has never been more alive and more kicking than it is today, because we just know and feel that there's an enormous opportunity and a responsibility we owe to the country into the future.
So very lastly, Indigo is the biggest airline in India in terms of market share, fleet size and every other thing. Going down further, a few years down the line, what do you think that the government can do to enhance the support for the airline sector? Do you think that there are certain policies that the government needs to change?
You know, these days when you say something good about the government, people think you're glad-handing the government. But I say this with utmost sincerity that at least in my sort of living experience, I haven't seen a more supportive government. They let you get on with their business. They understand the value aviation brings to the country. They're doing everything they can to build infrastructure. And from our point of view, if the infrastructure keeps getting built, airlines will thrive in this country. All airlines will thrive in this country.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
My wife, for instance, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or something, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked. My kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, thrash them out. That is one thing which is going to be very.
Okay, welcome back. Anand is still with us. We got about 8 minutes to go for market close. 660, 670 odd points lower on the Nifty right now. Anand, you heard the sort of Indigo co-founder. Your thoughts on the airline and how would you rate it?
Well, obviously, the business is doing well right now because of the fact that the capacities have fallen in the industry. And more importantly, given the state of production that we have at Boeing, it doesn't look like you're going to get supply of aircrafts coming up anytime soon. And with that, the capacity therefore continues to remain constrained. Look at what Air India has done so far. Their services, if at all, are even worse than what they were when the government was running it. So even privatization and 1 year of work after that has done nothing to actually provide up any build up any kind of competition there. So Indigo pretty much has had a smooth run in terms of a market which is growing and where there is almost no competition available. The competition will slowly come in. I think and some of the new aircrafts for Air India are coming through, but it's still very slow and the addition to the business is quite high. So for now, I think they've got a clean run and they will probably continue to do reasonably well, at least for the foreseeable future.
Okay, counting down to today's close, but let's get you some more opinion. Earlier today, we chatted with Tahir Badshah, CIO, Invesco Mutual Fund, on the manic panic selling that we've seen today. Listen in.
The sort of events shape up over the last few days, and it's obviously difficult to make sense of everything and put the pieces together. There will be, there are different factors which have been affecting different regions, whether you take Japan or US or maybe even emerging markets for that matter. I think as far as the US is concerned, what we read and what we probably still share as a view and probably is a continuation of what we, in a way, expecting that, we will probably try and see some correction as far as the inflation dynamics out there are concerned and some bit of slowing of growth as well. But in the meanwhile, I think what is happening is quite unexpected lines. In a way, I would say that because there was this expectation that in the second half of the year, we will probably try and finally see some possibility of rate cuts emerging. We have been taking this view that since a fairly long period of time, while we did in the last conversation mentioned that we've taken some heart in the earnings delivery up until now, and generally corporate earnings in India still being reasonably stable. But obviously we're expecting a fair bit of volatility in the second half, driven by many events. Some of these events which have happened in the last few days are not necessarily what we entirely anticipated, but we were expecting that there would be possibility of volatility coming through in the second half of the year, and that may crimp returns compared to what we have been used to in the past. So yes, you're right that we do not necessarily expect the second half to be as smooth as what the market behavior has been, especially in India in the last 6 to 9 months' time. Again, in the Middle East, we've seen commodity prices, particularly oil, behave reasonably well, in fact, favorably. So again, a departure from what we typically see when there is geopolitical risks. Many parts of the FMCG stroke, consumer durables stroke, value retail, if I were to call it, or consumption at the lower end of the market in general. Those are parts which have actually lagged the overall market in the last almost 24 odd months. So clearly a catch up. There are certain factors, interest rates coming along the way. That has also been a factor which affects these pockets of the market a little more than what it does to the others. So,
okay, that's some market opinion. Anand, any pockets, any themes, any trends from the earnings picture so far in Q1?
I'm sorry, from the what picture?
So earnings, from the earnings, is there any discernible trend for any sector, theme that you'd like to highlight?
Well, given the current state of the market, overall the earnings have been somewhat flattish. Obviously we are getting into a slightly slower year. In fact, considerably slower year this year compared to the year we just had, where you had blockbuster earnings. So this year the earnings are not going to be anything close. And obviously valuations are also significantly higher. The sectors that perhaps have done reasonably better than what they were last year, let's say, have been largely pharma. Somewhat expectedly, I think the interest is returning towards FMCG as well, more as defensives, and the fact that you are expecting that this year the earnings may be better, largely because of the rural demand growth. But other than that, I don't think that there is too much to celebrate. IT is looking up in the stock market. I don't think I see the same kind of growth in the earnings, actually. If you look at most of the other industries, because of the fact that the margins will be slightly lower this year than they were last year, the earnings will remain somewhat subdued, especially where we are talking about commodities as an input. And we are looking at infrastructure as well, which is kind of continuing to grow, but it's unlikely to be able to expand margin. So if you look at all the major sectors that have been driving the growth, most of them will do a little bit worse than what they did, and the defensives will do a little better.
I just want to point out that the CBOE volatility index, the VIX, the World Equity Fear Gauge, that has surged 120, I think 130% in fact. Yeah, 130. At the end of Friday, it was hovering around 21, 22. Right now, the reading is close to 43 on the VIX. So let's see, we're really bracing for what happens next in terms of the US market action. By the way, NASDAQ futures are again down 850 points. So whatever little hope of a recovery was there, I mean, it's looking very, very tentative at this point in time. And Dow futures are down about 700, 680 to be precise. And S&P 500 futures are down about 150. So it looks like the roller coaster could continue. So any final advice, Anand? I mean, the next 1 or 2 days, what should be done? If you're a long-term investor, just go and buy, ignore all the headlines and the noise, or do you think this time is slightly different from what we've seen the last year?
Well, as I said, for the domestic investor, the near term may actually provide you a trader. You may get an opportunity to trade up. I still believe that the valuations haven't corrected enough, but from the near-term price movement, there's been a sharp fall and therefore you could get a bounce. But that's for the near-term trader. For the longer-term investor, if you're really looking at getting in at a good price so that you don't have to worry about the prices, I think you should wait for a little while longer. It is likely, these are typically 2 months of the year where things don't go very well for the equity markets anyway. There are no major triggers that are going to happen except the US elections, which are a few months away. And yes, interest rates in the US will be cut inevitably, as they always do before the presidential election, irrespective of the state of the market. Don't let anybody bother you about that. They will cut interest rates, no question. So with that perspective, I think you are likely to see a revival a little while later. You have enough time to invest. Traders can obviously perhaps time the market even better.
Okay, all right, we'll leave it there. Anand, thank you very much for joining us and appreciate your time here on CNBC TV18. We end about 670 points lower. There's about 2.7% cut. Bank Nifty ends 2.5% low. We started on the Nifty 400 points down and we sort of piled on losses even from there. 2.5 lower, some 1,300 points down on the Nifty Bank. Actually, let me just take a quick look at sectorally what did the worst today. So on the downside, you basically have the metal index, which was down a full 5%. Real estate as a pack was down 4.6. Small cap index down 4.6, and the PSU bank index, which was down about 4.5% as well. CPSE down about 4.5% as well. And actually, I think it'll be easier to count if anything was up. I don't think there was any sectoral index which actually ended the day higher today. Rima.
Well, just 4 Nifty stocks closed up in the green, and 3 of them were the FMCG names. So HUL, Nestle, Tata Consumer managing to inch up and close up in the green. HDFC Life flat but with a positive bias. The Midcap index sinks nearly 2,200 points. 3.6% gone in the Midcap index, with the advanced decline ratio at 200 stocks advancing to 2,300 stocks declining. That's the nature of the market today. Big slam dunk and a manic Monday. We're going to wrap up in closing bell, but don't go anywhere because market sell-off comes up next.
As you go ahead. Third thing, I will have to say that keep learning, right? Our industry is about change. It's just a lot of innovation every day. Even actually, sometimes it is impossible to catch up with everything. So keep learning. Wherever is an opportunity, learn it, right? And the last but not least, resilience, right? Don't get disheartened by a failure, right? Failures will happen. Learn from it.
One particular moment, so I actually come from a very humble background. My father lost his father when he was just 7 years old, and just completed school. I was the first person in my, clan to go to university. So when he first came to campus, and I took him to the library, the Vijay Kelkar library there. I remember him actually being very emotional and saying, at least in my next life, I get the opportunity to study in a university like this. So that moment is something which is etched in my memory. I'll be absolutely honest, I did not even know what a chief economic advisor is at that time. If somebody said I'll be X, Y, or Z, or even executive director, I don't think even I knew what the International Monetary Fund was.
came here in 1991. 1991, that was my first year of college. I came here for Inter-IIT. So I remember this campus especially because this is one thing that I think especially the women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like, I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do, and I think coming back to this campus...
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the...
The first trade's coming up, 400 points lower, 24,300 is where we are at.
Essentially, global factory output has come to a stall.
It's a full bear attack. Buyers are on a complete strike.
When the US sneezes, everyone else catches a cold.
The mid-cap and the small-cap space seeing quite a bit of a sharper cut compared to the benchmark index.
We started 400 points lower, and as we approach the last 2 hours of trade, we're down even more.
Rising concerns over a possible US recession and Japanese carry trade unwinding spooked global equities. Indian frontline indices tanked between 2 to 3%. BSE listed firms erase investor wealth by nearly 15 lakh crore rupees. Shares plunge across Asia and Europe. Japanese Nikkei falls 12%, records its worst day since the Black Monday of 1987. Hello and welcome to this special edition Market Sell-Off. I'm Reema Tendulkar. With me is Prashant. And now Prashant is actually over at the big wall to tell us what exactly spooked the market and led to this plunge.
I mean, the fallout from the US jobs data really continued, coming into today's session as well. And I think that is essentially the first driver for, this panic which began on Friday. And of course, it continued over the weekend. It sort of showed through in prices as we came back in Asia this morning. So big miss on the US jobs data has triggered recession fears. It's actually the first time labor market data, monthly jobs data in the US has been such a big miss in this particular cycle. And remember, till last week, expectations were that it's going to be, a very moderate soft landing, which will allow the Fed to cut rates. And it's all very well orchestrated. But this could mean that, it's not all under control. And the Fed perhaps is even behind the curve with what they want to do as far as interest rates are concerned. As a result of which, US money markets are now pricing in a 50 basis point rate cut in September and a total of 125 basis points rate cut, through the course of 2024. So this is a trigger and a sort of reason number one. Then we come to what's, of course, been happening in Japan, right? We've heard yen and carry unwind all day today. First, let me tell you what happened on prices. So the benchmark Nikkei is down over 20% in the last 3 days now. And you look at the USD JPY, that has fallen 20 yen to a dollar in the last 1 month. So basically, the currency has gone from 162 to 145 from the beginning of July. That's a massive move for a currency like that in such a short time span. The last time we had this magnitude of a rally, along with interest rate differentials between Japan and the US around 5%, it was back in 1998-99. And of course, we had that sort of LTCM crisis back then. Now, fears of yen carry trade unwinding is essentially reason number two. So, I mean, people borrowing in Japan, very low interest rates, investing around the world. And of course, the yen moving so sharply upsets plans. Stops are hit and there is a forced unwinding which takes place. So that is reason number two. Number three, And this went unnoticed under the radar for the first couple of hours when we began trading. But Nvidia, the big reason why US stock markets have done so well, is reportedly delaying its next AI chip, Blackwell, by at least 3 months. And it was not a coincidence that the Taiwanese market was amongst the worst performer in Asian markets today. And also sort of take a look at the fact that NASDAQ continues to underperform the S&P. So that is, I think you could blame it on the Nvidia story there. And number 4, I don't think this was a really dominating driver, but geopolitics, right? The political news website Axios reports that, attack by Iran and Hezbollah against Israel could start as early as Monday. I would say that, what was happening with the currency markets and fears of a US recession were the dominating drivers. This, of course, if it were to come through and it's a big one, could hurt at the margin going forward. Back to you.
Okay, thank you very much for that. Let's also invite Anish Tavakle on this special edition. Anish, you heard Prashant. What's the advice now? Because there is considerable panic in the markets now. Mutual funds were sitting on a fair amount of cash. I think 1.5 lakh crore is what we had last heard about a week back. What happened in today's trade? Was that money being deployed in, or people are fearing a bigger correction and a fall and therefore still staying away?
Look, I can't speak for what anybody else would have done. At ICICI Prudential, we follow a fairly disciplined approach, right? If markets correct and we had been sitting on cash, we will start deploying gradually as the market corrects. So that's what I would expect each of the fund managers would have done. I wouldn't even know what each of them would have done, but I would suspect if people were sitting on cash and there was a sell-off, some of it would have got deployed.
Anish, what is your reading, though, of the situation? You're someone who tracks the macro cycle also closely. What's your reading? Yeah.
My sense is I'm not sure the Fed would be in a panic mode right now. The jobs data was disappointing, but payrolls are still positive. Right? The Fed really panics if payrolls are negative. The unemployment number has increased not because number of people employed has declined, but people joining the workforce has increased. Right? So more people are coming into the workforce. That's an increase in the denominator, which is driving the increase in the unemployment rate. Now, if the number of payrolls were declining, right, the Fed would panic because it would say, look, people are losing jobs. One person's job is one person's, and they'll cut spending, and one person's spending is another person's income, and this would create a vicious cycle. The fact that jobs are growing but growing slower is not going to create a vicious cycle. And the Fed would say, look, we'll cut because the growth rate can be higher, but it's not as if the economy is contracting. So my sense is, yes, we'll get a cut, but I don't think it will be the kind of panic-driven cuts that we got either in the global financial crisis or at the time of COVID. Right? I think there will still be more measured cuts.
Okay, more measured cuts. I'm going to come to you on the currency market moves as well in just a bit from now. But let's go across to the Hormuz, who's standing by with all the sort of specific action that we saw through the course of the day. Hormuz, take it away.
Usually in a session like this, when there is a sell-off across the board, you may wonder that a dip would get bought into, as has been the trend. But sadly, that was not the case in today's session. And the benchmark indices, both the Sensex and the Nifty, saw their biggest sell-off since the 4th of June. And as a result of which, 15 lakh crore worth of investor wealth was eroded after today's sell-off. And the sell-off was across the board, with 46 Nifty stocks ending in the red, with just a select FMCG stocks and some pharma names bucking the trend in today's trading session. And the sell-off, as I mentioned, was across the board. Metals, media, realty, auto, PSU banks, all of these indices saw drops of anywhere between up to 4% or even more, with metals and real estate being the biggest sectoral laggards in today's trading session. The key point also to watch out for today was the India Wix, and at one point of time the Wix was up almost 52%, and that was the biggest single day jump that it had seen since August of 2015. 19, eventually ending 42% higher and above the mark of 20. That might be a cause of concern as well. There were, of course, global facing stocks that took a bit of a beating in today's session. Tata Motors was one of them, 7.5% lower, the top Nifty loser, and the other one was Samvardhana Motherson as well. That stock ended 10% lower, of course, because of the relations to the Japanese markets as well. 600 stocks, almost 600, 580 to be precise, on the BSE ended on a lower circuit in today's trading session. And of course, as I mentioned, there were select FMCG and pharma names that bucked the trend. Marico was one, Glenmark Life was the other. Devyani International, after its earnings today, ended in the positive, so that was a good sign. And lastly, on the commodities front, the crude oil prices have fallen to a lowest level in 6 months, and of course copper prices are at a 4-month low. There were specific sectors that bore the brunt of the sell-off today. Real estate was one of them. Almost every index constituent ending lower. The top losers there being Suntech Realty, Brigade Enterprises, Godrej Properties, all of them seeing losses of between 5.5% to 6.5%. Railway PSUs are bearing the brunt as well. IRFC, IRCON, RVNL down at least 25% now from the peaks that they made last month. Defense PSUs, a similar story playing out there as well. Mazagon Dock, Cochin Shipyard, Garden Reach, all of them ending lower, almost 5% or more. And metals having a meltdown in today's session. The metals index also was down nearly 5%, 6.5% lower for SAIL, similar for Nalco and Jindal Stainless, 7.5% lower in today's session. So all in all, red across the screen, and there was no sign of any sort of support at lower levels. Back to you guys.
Okay, thank you very much for painting that picture for us. Anish, how concerned should we be about what's happening with respect to the Japanese carry trade? Is that something which can precipitate a big crisis? How large is this entire carry trade market?
So my sense is, look, let's break this up into what it means for the economy and what it means for markets. I think for the economy, the Indian economy per se, I don't think it's a big deal. We are our external account, our current account is in good shape. We have reasonably large stock of reserves. So even if capital inflows, even if they were to moderate for a while, I think the economy can withstand it. So I'm not concerned about it from an economic perspective. From a markets perspective, it could be one of the factors driving volatility. There are enough reasons for the markets to be volatile, including geopolitics. And that could be an issue for the markets in the short term. But I don't think it really plays out as it impacts the earnings outlook as far as the corporate India is concerned.
Sorry, so what about financial markets, Anish?
No, so look, in equity markets, it could have an impact. And that, see, the real issue is that the valuations are not cheap to start with, right? So, and when valuations are not cheap to start with, what causes markets to get worried? It could be like in the short term, any factor can do that. And this could be one of those, because some of the hypothesis, bull case, people were arguing that markets are reasonable because FIIs could still come in, and this could put a break in that thesis. So I do think, yes, there could be volatility in the markets, but I would not expect it to impact the economy. And I wouldn't change your long-term investment thesis based on something like that.
What's the sort of, I'm sure you have inputs from your sort of internal economists, etc. What are they expecting? And say, for example, just to go back to the US, if there is a sharper slowdown, which are the sectors most impacted, Anish, to your mind?
No, it would look. It would be the discretionary sectors, the sectors that have been like the tech sectors, which has been very hot of late. So that is typically the sectors that are impacted. See, what might provide resilience to the US economy is if and if the Fed does provide some monetary easing, the US house building activity could pick up. Right? There has been, the reason we saw in the US economy rents rising sharply was because the US housing market is undersupplied. And I think while the tech side of it could weaken, the housing, which is could pick up actually. So some of the discretionaries around tech could weaken, but some of the, housing is also normally cyclical, but yeah, that could provide some resilience.
But generally in one's sector positioning now, say for the next 6 to 12 months, is it time to increase allocation to FMCG because numbers have started picking up? Rural, the rainfall situation has been good, Kharif sowing, and plus it acts as a defensive in the face of global turmoil when global-facing stocks could face potential headwinds going forward. So should one look at increasing the FMCG allocation in one's portfolio?
See, I am not very positive on FMCG. To be honest, I have never been of the view that FMCG sector was weak because the economy was weak or because the rural sector per se was not spending. I have been concerned about very high margins in the FMCG space. And I do think some of the companies are over-earning, as I would say. And if these margins were to correct, there would still be earnings downgrades coming through in these sectors. So I would be cautious in rushing into FMCG stocks.
I've got that. Anish, stay with us. I'm going to take a quick commercial break here. And we're going to come back in a bit from now. But as we do that, we're going to leave you with some more opinion that we got through the course of the day. So just listen into some sound bites. This is Arvind Sanger and others weighing in, of course, on the market sell-off that we had. And we're back with Anish on the other side.
Even if the non-farm payrolls labor market data in the U.S. was a bit disappointing, we're really not seeing other economic indicators at all pointing to a recession. And also keep in mind that the labor market is a lagging, not a leading indicator. So we really want to be looking more, say, at PMIs to get a sense of how well the U.S. economy at least is doing.
My point is the market was on this optimistic high that we were having this perfect soft landing. Everything was hunky-dory. Inflation is defeated. Fed is cutting rates. And the market went bananas over the last several weeks, months. And what has just come back is some recognition, not a certainty, but some recognition that the probability of a recession has gone up. So the market has corrected, but not corrected to a level where you could say, wow, we've already discounted all the bad news. We're just starting to recognize that maybe the risk is two-sided and it's not just a one-way street. And so in that sense, I think, I don't think it was an overreaction. I think it was overdue. I think there was too much optimism and the risk of a recession is real. I don't think it's, a certainty, but it's certainly a reasonably good probability that we could dim it to a recession.
The sort of events shape up over the last few days, and it's obviously difficult to make sense of everything and put the pieces together. There will be, there are different factors which have been affecting different regions, whether you take Japan or US or maybe even emerging markets for that matter. I think as far as the US is concerned, what we read and what we probably still share as a view and probably is a continuation of what we, in a way, expecting that, we will probably try and see some correction as far as the inflation dynamics out there are concerned and some bit of slowing of growth as well. But in the meanwhile, I think what is happening is quite unexpected lines. In a way, I would say that because there was this expectation that in the second half of the year, we will probably try and finally see some possibility of rate cuts emerging.
That actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya. And what, you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown.
Yeah.
So congratulations to you and to the entire team at Agnikul. I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, is there anyone in specific that you would like to emulate in your style of working?
The one individual that I have, I wouldn't say seen in very close quarters, but
Okay, welcome back. Markets, of course, ending sharply lower, some 670 odd points lower. We've been getting you views from across the board. Here's Adrian Movat as well, someone who's watched emerging markets for a long time. With his thoughts, we spoke with him in the last hour of trade today. We'll come back with Anish Tavakle in just a bit.
I think the Fed
has looked at the data, and the data as of now has been a headline inflation rate well above their 2% and a job market that's looked pretty robust. Now, we do know that monetary policy acts with a lag, and the tightening didn't seem to have slowed this economy down at the rate you would have thought it would have, considering that the tightening started in 2022. So, you know, is the Fed a bit behind the curve? Maybe, but I'm not sure anyone else could have done much better. So the yen had weakened to almost actually across 160 at one point. You know, it was a good place to borrow. Rates are still zero, and the currency's been weakening. So we're seeing an unwind of that risk trade. Now, part of that unwind was through a catalyst from the central bank, with the Bank of Japan intervening. But I think it's all sort of worked well in terms of markets that were quite extended with the yen oversold, with US tech equities perhaps overbought. And you're just seeing an unwind of risk. And for the yen, I think it will probably overshoot, but then I think it will go back to being a relatively weak currency. I'm not a buyer that the Bank of Japan should be raising rates. I think domestic demand in Japan still remains very weak. I don't believe the Bank of Japan should take the risk of tightening policy at this point.
Anish Tavakle is still with us, co-CIO at ICICI Pru AMC. Anish, thanks for waiting. You know, from the highs, I think Japan is down over 20. I think NASDAQ is down some 15. We're down about 5%. Just a sort of slightly high level. What could this, I mean, this is a slightly globally synchronized slowdown and a bit of a fall. What could we be looking at in terms of this drawdown?
See, I wouldn't venture to say, you know, what the near-term outlook would be. I've said consistently that over a 2 to 3 year period, the markets will follow earnings. The multiple could come down a little bit, but earnings will be the primary driver of returns. And I think the earnings outlook in India still remains healthy. Having said that, I would say the risk-return trade-off is much better in the large caps than in the small and mid caps. And small and mid caps could see a significant correction in India. That is why I think one needs to be very, very careful in the small and mid cap space.
By the way, I don't know if I think it is too early, but let me ask you anyway. Have flows continued at the same pace? I mean, inflows today as well?
Mutual fund flows remain healthy. I mean, I wouldn't know what happened today, but yeah, till now, I don't think we'd
nothing at all,
to suggest that it was otherwise.
In terms of you know, portfolio allocation, a lot of them also have started investing in global funds. You know, maybe it's a small percentage of their overall, you know, holding, but we are still increasingly getting investments in global funds. Is that something that should continue at times like this, or again step back?
No, actually, as something's correct, it obviously calls for a greater allocation. So I wouldn't say step back. I would always say gradually increase. If a market is correcting, and if you like the market at a higher level, you should like it more at a lower level. That is something that we would always recommend.
Structural changes one should make to a portfolio.
Sorry, I missed that.
So I'm saying structurally, if one has to make changes, it would just be perhaps reduce allocation to mid and small caps because of excessive valuation.
Definitely. Yeah,
Other than that, there is no thematic change, no change in domestic.
I think, see, what we had been doing is that sectors that had done very well last year, which was domestic cyclicals, right? Now, within that, if you see, earnings growth was very strong last year because you got both improvement in profitability and growth in volumes. This year, earnings growth will be more moderate because profitability in quite a few sectors has peaked, right? So all we are going to get is volume growth and maybe even some moderation in profitability. So with that, you know, within sectors, one has to be a bit more selective, right? Last year, you could buy all stocks within a sector. Now you have to see, okay, some of them are pretty close to peak earnings, and earnings downgrades might be more likely. So I think companies where earnings expectations are very high and multiples are very rich, one might need to scale back.
And hence that preference for large caps overall, right?
Absolutely. I mean, absolutely. Yeah.
Got that. You've been bullish on housing, real estate, etc. for a while. I mean, that entire segment that continues, right? Ani, just to
So what we've been bullish on is that housing will be a driver for the rest of the economy. It's not just housing per se. But we've been bullish on the fact that as long as house building activity continues, it will be a driver for both employment creation and demand for the rest of the economy. And I mean, that thesis does not change, actually.
Okay. All right. Anish, we'll leave it there. Thank you very much for joining us here today.
Nice talking to you.
Nice to talk to you as always as well. Thank you. Well, with that, it's a quick wrap on this edition of Market Sell-Off. I mean, we're of course going to track what's happened, what will happen in global markets through the rest of the evening as well. Already updates are starting to filter through. But thank you for staying with Rima, me, and the entire team here. We take a break. More news and updates follow on the other side.
I came here in 1991. 1991, that was my first year of college. I came here for inter-IIT. So I remember this campus especially because this is one thing that I think especially the women need to hear. So I was, good in table tennis, but I became the captain because my captain dropped out. And I came here and we were playing and I won the first game. And then all the men started booing me.
Are you serious?
Yeah. And so I realized the power of mind, right? Like, I was better than the player that I played against, but I lost. And I think that was my first lesson that I learned, which is that, you might be better, but sometimes, your circumstances make you believe you're not, and therefore you lose. So I think that's one thing that everybody needs to do, and I think coming back to this campus...
We have to correct that. We have to give it a big round of applause now to make up for what happened in the past.
Yeah, but my coach also gave me gajar ka halwa, so it was okay.
Today, she is the director for the mission that actually saw India's first private rocket being launched. So tell us a little bit more about that, Saranya, and what, you did that all under 30?
They gave me an opportunity to be the vehicle director for the mission. So it was a huge learning for me to build. We started off the company by at least when I went in, I didn't know anything about the rocket building. So to building a vehicle which can actually fly, it was amazing.
Not just actually fly, it's actually flown. Yeah. So congratulations to you and to the entire team at Agnikul. I know for many of the students here in the room, you're a role model, but you talked about Naveen being the initial role model for you when you got started. But let me end by asking you, who do you look up to today? Which are the companies that you respect and admire? And, is there anyone in specific that you like to emulate in your style of working?
The one individual that I have... I wouldn't say seen in very close quarters, but seen from some distance as part of my work in CII, but I truly admire is Mr. Uday Kotak. I think he has built a franchise in a bank that is truly outstanding. And to do it in one generation and the quality of talent and the kind of ownership that talent takes is remarkable.
Finance Minister Nirmala Sitharaman is just a few hours away from marking a new record. The CNBCTV18 coverage of the Union Budget starts right now.
Hello and welcome to CNBCTV18 Motilal Oswal Budget Headquarters.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. A sea of red on Dalal Street. Sensex down over 2,000 points. Nifty down over 600 points. More than 15 lakh crore rupees in market cap wiped out in a single day. Japan's Nikkei tumbles over 12%, marking the biggest crash in 37 years. Shares plunge across Asia and Europe as fears of a US recession rock markets worldwide. Crude oil prices decline to 8-month lows. Cryptocurrencies see a rapid sell-off. Gold sees safe haven buying along with US treasuries. The global sell-off pushes the Indian rupee to a record low. 10-year bond yields drop to a 26-month even as India's money market remains largely stable compared to its peers. Bangladesh stares at a political vacuum as Prime Minister Sheikh Hasina resigns, leaves the country in a military chopper. Protesters storm the Prime Minister's official residence, torch her office in Dhaka. The army chief addresses citizens in a TV broadcast, says a caretaker government will be formed. Hezbollah launches a drone attack on northern Israel as tensions rise in the region. 40 Palestinians killed in Gaza in the last 24 hours after Israeli attacks. US Secretary of State Antony Blinken tells G7 an attack by Iran is imminent. Indigo set to launch business class travel on the Delhi-Mumbai route from mid-November with fares starting at 18,000 rupees. The airline hopes to add 7 new international destinations by this fiscal. Aster DM Healthcare is eyeing Care Hospital. Sources say talks in advanced stage with private equity player Blackstone, which owns over 72% stake in Care Hospitals. Independent directors at state-run Power Finance Corporation raise concerns over a loan to the Shapoorji Pallonji Group. Sources say directors question the loan to an infra businesses, which is not a core business for PFC. The Supreme Court takes suo motu cognizance of safety norms in coaching centres in Delhi, cites the recent tragic deaths of 3 UPSC aspirants at a coaching institute due to flooding, says coaching centres have become death chambers, issues notices to the Delhi government and the union government on safety measures prescribed. American Noah Lyles wins the gold in a dramatic photo finish at the men's 100 meters dash in Paris. Pips Jamaica's Kishan Thompson by 0.005 of a second. All athletes finished below the 10 seconds mark in what was the closest race ever. Right, a manic Monday on the Wall Street and stock markets worldwide. Sharp losses on the Sensex and Nifty as fears of a US recession, Fed rate cut timeline and other geopolitical factors spooked the investors. Prashant Nair is here with more on the market action. Over to you.
Well, it's a red day, and it's not just here, but around the world as well. So I'm just going to do, what I'm going to do is put out 4 reasons why the market actually got spooked. It all, of course, began on Friday evening with the US monthly jobs report, which was much lower than what was expected. And that essentially sparked recession fears. That is very different from even the mood a week ago when people were of the opinion that the US economy will engineer a very soft, orchestrated kind of a slowdown, which will not too bad, but at the same time, it will allow the Fed to cut rates as well. All that is out of the window now, and markets are themselves anticipating that the economy perhaps will see a bit of an uncontrolled slowdown, hard landing if you want to use that word, and the Fed now seemingly is behind the curve, which means that it needs to cut now and not later this year. As a result of which, money markets are now pricing in not a 25 basis point cut in September, but a 50 basis point cut in September. And cumulatively for the year, they're expecting a 125 basis point rate cut through 2024, the remainder of 2024. The other one, of course, is this entire yen carry trade business. Investors borrowing sort of cheap yen in Japan. Interest rates have been low there for the last 25 years. And then investing in higher yielding stocks, bonds, all asset classes, foreign exchange around the world. A lot of that money has gone to all places around the world. Now, what has changed that is that the yen has actually gone from 162 to 142 in 1 month flat. I mean, this is not some piddly small frontier market, but with yen and Japan we are talking about. As a result of which, currency calculations when you're actually doing this carry trade goes haywire, and that is a result, and as a result of which a lot of forced unwinding is taking place. That is essentially what carry trade unwind is. No one actually knows how large this is, how much money is at stake on this carry trade, specifically with regards to yen going, this money going to other parts of the world. but it's expected to be sizable. Next, of course, is NVIDIA, which has, of course, been the outsized driver for US market returns. And news came in early that NVIDIA is reportedly delaying its next AI chip by at least 3 months. It's called Blackwell, and it's not a coincidence that the Taiwanese market, which has got so much sort of, semiconductor weightage and the entire value chain, supply chain, was amongst the worst performers in Asia today. And also tellingly, NASDAQ has been underperforming the S&P 500, even though, the big tech earnings are all behind us. And that's thanks to, of course, fears around NVIDIA. Geopolitics, I don't think, was a real dominating driver, but at the margin, keep that at the back of your head as you look ahead, because at the political news website, Axios reported that, an attack by Iran and Hezbollah against Israel could start as early as Monday. So a cocktail of events is always coming together. Markets, of course, taking a big gash today. Back to you.
India, I think it would be less a gross scare. People have been talking about valuations for Indian equities for a very long time. Nonetheless, the market kept going up, and if anything, recently compared to many other global markets, it still performed relatively well. But I think now that question is going to become much more pertinent to investors when they see a much less supportive global environment for risk. Markets with high valuations are going to be one of the first things that they look at.
I think as far as the US is concerned, what we read and what we probably still share as a view, and probably is a continuation of what we, in a way, expecting that, we will probably try and see some correction as far as the inflation dynamics out there are concerned, and some bit of slowing of growth as well. But in the meanwhile, I think what is happening is quite unexpected lines. In a way, I would say that because there was this expectation that in the second half of the year, we will probably try and finally see some possibility of rate cuts emerging.
The market was on this optimistic high that we were having this perfect soft landing. Everything was hunky-dory. Inflation is defeated. Fed is cutting rates, and the market went bananas over the last several weeks, months. And what has just come back is some recognition, not a certainty, but some recognition that the probability of a recession has gone up. I don't think it was an overreaction. I think it was overdue. I think there was too much optimism, and the risk of a recession is real.
Right, those were some market experts and their outlook on what happened in the markets today. Hormaz Fatakia is here with the big movers in trade today.
Usually in a session like this, when there is a sell-off across the board, you may wonder that a dip would get bought into, as has been the trend. But sadly, that was not the case in today's session. And the benchmark indices, both the Sensex and the Nifty, saw their biggest sell-off since the 4th of June. And as a result of which, 15 lakh crore worth of investor wealth was eroded after today's sell-off. And the sell-off was across the board, with 46 Nifty stocks ending in the red, with just a select FMCG stocks and some pharma names bucking the trend in today's trading session. And the sell-off, as I mentioned, was across the board. Metals, media, realty, auto, PSU banks, all of these indices saw drops of anywhere between up to 4% or even more, with metals and real estate being the biggest sectoral laggards in today's trading session. The key point also to watch out for today was the India Wix, and at one point of time the Wix was up almost 52%, and that was the biggest single day jump that it had seen since August of 2015, eventually ending 42% higher and above the mark of 20. That might be a cause of concern as well. There were, of course, global facing stocks that took a bit of a beating in today's session. Tata Motors was one of them, 7.5% lower, the top Nifty loser, and the other one was Samvardhana Motherson as well. That stock ended 10% lower, of course, because of the relations to the Japanese markets as well. 600 stocks, almost 600, 580 to be precise, on the BSE ended on a lower circuit in today's trading session. And of course, as I mentioned, there were select FMCG and pharma names that bucked the trend. Marico was one, Glenmark Life was the other. Devyani International, after its earnings today, ended in the positive, so that was a good sign. And lastly, on the commodities front, the crude oil prices have fallen to a lowest level in 6 months, and of course copper prices are at a 4-month low. There were specific sectors that bore the brunt of the sell-off today. Real estate was one of them. Almost every index constituent ending lower. The top losers there being Suntech Realty, Brigade Enterprises, Godrej Properties, all of them seeing losses of between 5.5% to 6.5%. Railway PSUs are bearing the brunt as well. IRFC, Ircon, RVNL down at least 25% now from the peaks that they made last month. Defense PSUs, a similar story playing out there as well. Mazgaon Dock, Cochin Shipyard, Garden Reach, all of them ending lower, almost 5% or more. And metals having a meltdown in today's session. The metals index also was down nearly 5%. 5%, 6.5% lower for SAIL, similar for NALCO and Jindal Stainless, 7.5% lower in today's session. So all in all, red across the screen, and there was no sign of any sort of support at lower levels.
Right, thank you, Hormas, for that. Let's shift our focus to the big international update. We are tracking this political turmoil in Bangladesh. After facing weeks of anti-government protests, Prime Minister Sheikh Hasina has fled the country. The army chief of Bangladesh made the announcement while promising to put an end to what he called anarchy. In a live broadcast, Chief of Army Staff Zaman said a caretaker government would be formed. Visuals show thousands of protesters storming the palace of Prime Minister Sheikh Hasina, who has fled her residence for a quote-unquote safer place. Bangladesh's Channel 24 has broadcast visuals of a huge crowd celebrating outside Sheikh Hasina's residence. In what comes as a strong display of dissatisfaction against the Hasina regime, a statue of her late father, Sheikh Mujibur Rahman, colloquially referred to as the founder of Bangladesh, was vandalized. The army chief also said that troops have been ordered not to shoot at the protesters. This comes after a bloody Sunday when at least 98 protesters died and several injured in clashes. The death toll is around 300 since the demonstrations began a month back over a High Court ruling in favor of reinstating 30% quota in government jobs for descendants of freedom fighters. Hasina's refusal to meet the students led to the protests turning violent. The government had to cut off all connectivity through broadband or internet for 11 days, which is yet to be restored fully. There's heavy police and army presence on the streets of Dhaka. All right, for more on this, I'm joined by senior journalist Salahuddin Shoaib Chaudhry and Bangladesh's former Foreign Secretary Shamsher M. Chaudhry on the broadcast to get us the latest and what's happening in Bangladesh. Let's start first with Salahuddin Chaudhry. Mr. Chaudhry, thank you for making time and speaking to us. For the benefit of our viewers, do we have clarity as to where Sheikh Hasina is headed? What is the latest on that front?
Thank you very much. Actually, for the last several days, particularly from the July 17th, this country was witnessing so much of terrorist activities and vandalism, arson attacks and uncertainties. And there was curfew, there was internet outage, and so on. And after the things came to a little bit of normalcy when army came on the street, following the imposition of curfew for a few days. But again, things started going worse for the last 3 days. And this student movement protest, which began with the demand to reform the quota, it thematically, for the last 3 days, it turned into a one-point movement demanding resignation of Sheikh Hasina. Now, this morning, actually, although there was indefinite curfew imposed from last evening throughout the country, so from this morning we have been seeing thousands of people entering Dhaka city and heading towards Shahbag, very near to the Dhaka University. So we were almost anticipating that people are not abiding by the curfew. Things started getting a dramatic change when there was a declaration on the local television channels that the Army Chief General Zaman will be addressing the nation. It was initially set for 2 p.m., but then it took place at 4:30, very brief. And during this briefing, the Army Chief said Sheikh Hasina has resigned and she has left the country. And they are going to form an interim government, and he called upon people to refrain from terrorist activities, destruction, vandalism, because he said such things cannot bring anything good to the nation. And prior to this press briefing, the Army Chief met political parties for discussion. There was a representative from BNP, there was a representative from Jamaat Islami and Jatiya Party and others. Awami League did not participate in the dialogue. So now, instead of the vandalism and terrorism what we are witnessing. Now we are seeing that people are chanting slogans and demonstrate, they are celebrating. But at the same time, there is currently looting going on at the residence of the Prime Minister.
Okay, looting going on at the residence of Sheikh Hasina's residence. Please stay on with us. Bangladesh's former Foreign Secretary Shamsher M. Chaudhry is also with us. So thank you for staying with us. Everybody has seen those visuals of Sheikh Mujibur Rahman's statue being vandalized. This is unprecedented. For the benefit of our viewers, could you explain to us what does the new army regime in Bangladesh mean for the country and for the rest of the world?
Thank you. First of all, I don't even for a moment support the idea of destroying the statue of the father of the nation. But I guess in a mob situation like this, things are not always logical. Everybody was waiting with great anticipation what the army chief was going to say. And he came on the air, as the previous speaker said, around 4:30, something like that. And more like 4 o'clock. And it was not a written speech. He read out, he just spoke to the media present there. What he said that the Prime Minister has resigned, and he didn't specify she has left the country. Yes, she has resigned, and the political and civil society people who have been who are meeting with the army chief and maybe some senior officers of the army also at the army headquarters have come to an agreement that they will go to the president to form an interim government. The very word interim means that whatever government is formed, it has to be within the terms of the country's constitution, otherwise it will be constitutional vacuum. And number two, that it will be an interim government. Right. I don't know what is the length of the interim government will be, which also implies that there will be call for fresh elections. Now, the interesting thing that I find is the group of people who were called to meet the army chief. Among them, the BNP leaders, he did not name them, but there was the two leaders from Jatiyo Party. I spoke to one of them just a while ago, and they are on their way to the president's house to work out an interim arrangement that is covered by the constitution. Now, the fact that no emergency has been declared makes it very clear that the constitution is very much in force.
Okay.
Whatever solution comes to, it has to be within the constitution. My own reading with limited knowledge of constitutional law is that the parliament will remain. Prime Minister from another party will be appointed for a 3-month period, and then they'll go for a fresh election. So that will ensure the continuity of the constitution, but not the constitution of the present parliament.
Okay. So quickly in 2 seconds.
Public resentment has been growing since the last election, which was seriously flawed. The one before that, which was even more blatantly flawed. And but this time it outburst in the form of the quota reform issue. But then it became a much broader public movement where people coming up from all sides, and made worse by police firing and killing unarmed students. Video footage of police firing on unarmed students had really fueled the fire enormously. There was a young student who was supplying water to the protesters. He has been shot. A helicopter gun shot fired from a helicopter, apparently a police helicopter. A little child was killed when the bullet hit his head on the 6th floor of their apartment, of their building. So all these scenes of yesterday, close to 100 people were killed. Then the Awami League government's decision to unleash their student wing on the protesters, which led to merciless attacks on the protesters by the Chhatra League, backed by the police. And the Chhatra League people were wearing helmets and all kinds of things. All this combined made an already bad situation far worse. And then it came to there was a 9-point demand was made by the civil society, which then eventually, when the killings continued, was turned into a one-point the resignation of the Prime Minister. It actually happened today, and she has left the country.
Yeah. So my follow-up question was: is there any clarity on where Sheikh Hasina is headed? Any clarity, any confirmation on that front?
I'm afraid I don't have any clarification. It is all speculation, rumors. Some say she's in Agartala. Some say she's somewhere in West Bengal. Some say she has left with her sister. We don't know who else has accompanied her. But I don't think she will try to find a safe place in Bangladesh, given the present anger of the mob, especially the youth. It is the younger generation who came under attack. They are jobless. Now, the fact that the representative of the Jamaat, which is not a registered political party, and which has very recently been banned by the government through an executive order, at the meeting with the army chief is something that we cannot ignore. This party is not registered in the Election Commission. This party is a banned political party. In spite of all that, the army chief perhaps felt compelled to include the Jamaat in the arrangements that are being worked out now. There are civil society members who are progressive, Asif Nazrul, maybe Hossein Zillur Rahman, the Jatiya Party representative Parishani Sultan Mahmood. I don't know who from the BNP was, but the army chief also made it clear there was nobody from the Awami League at the meeting.
All right. Thank you so much, Mr. Chaudhary and Salahuddin Chaudhary, for making time and speaking to CNBC on these developments that are unfolding in the country of Bangladesh. We will keep following up on these updates. For now, it's time for a short break. But coming up next, Indigo set to launch business class travel on the Delhi-Mumbai route from mid-November with fares starting at 18,000 rupees. More details when we return.
Markets have not just grown, they've broken several records in the last 25 years. India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Welcome back. Indigo is marking its business class foray after 18 years of operations. Its first flight with business class seats will be launched mid-November on the Delhi to Mumbai route. The airline plans to introduce Indigo Stretch on 12 routes. The fares will start from 18,000 rupees. Danish Anand finds out more about the product.
India's largest airline in terms of fleet size and market share, Indigo, is all set to grow further. On the occasions of 18 years of flying operations, the airline announced the launch of a tailor-made business product that will connect Delhi to all metro routes.
We start with the metro-to-metro routes, the nation's busiest and business routes. We start with 12 seats on board of the aircraft. We feel that's an adequate number at this point in time. But clearly down the line, when the 350 will be there when we start to fly longer. So one should never look to any decision or any proposition in isolation. You should look at what's the total picture and the total plan. I think what we're here today doing are unveiling parts of those building blocks of that total plan.
As Indigo now eyes of becoming an airline with a unique business model, the airline also launched its loyalty program called Blue Chip.
It's going to be an affordable business class, and you see the name itself, Indigo Stretch, is basically saying it all. So we are introducing a product which we feel is tailor-made for the Indian market. It will be affordable. It will have all the things you need. It will have power. It will have a different service level. It will have a different catering level, and it's going to be totally tailor-made.
With Indigo all set to induct the A321 XLR aircraft from 2025 and the A350-900 wide-body aircraft from 2027, the airline has ambitious international plans, and by the end of the current financial year, the total number of international destinations that Indigo will fly to will be 40, and as more and more aircraft are inducted, the number of international destinations will also go up. With video journalist Naresh Saini, this is Danish Anand for CNBCTV18.
And with that's a wrap on this edition of Business 360. News and updates continue right here on CNBCTV18.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. And what a great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and cnbctv18.com.
Migraine, a word that sends shivers down the spine of anyone who's ever experienced it. It's estimated that 1 in 7 people worldwide will experience a migraine at some point in their lives, highlighting just how pervasive this condition is. Migraines affecting 10% of the world's population are not just mere headaches. They are moderate to intense, throbbing, one-sided pains that can last from 4 to 72 hours, sometimes even longer. Accompanied by nausea, vomiting and sensitivity to light, these episodes can strike sporadically or several times a month. The most common type hits without any warning signs or aura. Ranking as the third most common disease worldwide, migraines disproportionately affect women, who are 3 times more likely to suffer than men. In numbers, that's 1 in 5 women, 1 in 16 men and 1 in 11 children. Migraines mainly affect those between the age of 18 and 44, with the peak occurring in the 30s. In India, an estimated 15% of the population battles migraines, mirroring global trends. 17% of Indian women and 6% of Indian men experience migraines, most commonly between the age of 20 and 50. Each migraine has a unique set of triggers. Common culprits include stress, bright lights, loud sounds, strong smells, physical exertion, hormonal changes, and the infamous 5 C's: cheese, chocolate, coffee, cola, and citrus fruits. In India, majority of migraines are triggered by emotional stress, fasting, physical exhaustion, travel, and sleep deprivation, with 35% of sufferers encountering multiple triggers simultaneously. Though not typically life-threatening, migraines wreak havoc on daily life. They're the 6th highest cause of disability worldwide. The statistics are stark. 1 in 4 sufferers miss work or school, half struggle with housework, 1 in 3 miss out on family or social activities, and a staggering 80% with chronic migraines report reduced participation in family activities. So how can we reclaim our lives from migraines? What are the best strategies for management and treatment? To guide us, we have Dr. Ravi Shankar, an esteemed expert in this field. Welcome to the show.
It affects people across different age groups, and it can start even in children around the age of 8 to 10 and go on to affect people till the age of 50. The commonest trigger that we see in our part of the world is related to the weather conditions, the type of temperatures we have, the heat, humidity. I always tell my patients, do not treat just migraine the attack, treat migraine the disorder, so that in the long run, long term, your frequency, your severity, and your quality of life should improve.
What is a migraine? If you could just start by defining that for us.
Migraine is one of the commonest reasons why recurrent headaches happen. And it affects people across different age groups, and it can start even in children around the age of 8 to 10 and go on to affect people till the age of 50. Migraine is also known to occur beyond 50, but much less than in the younger age group. So whenever you find somebody coming with a history of recurrent headaches, which could be on one side or both sides or all around the head, and you find that there are trigger links, and you find when you ask the question that there is somebody else in the family also who gets recurrent headaches, then the penny should drop that what you're dealing with is probably migraine.
Okay. So how can a patient distinguish between a migraine or any other type of headache? And there are many types of headaches, such as tension headaches or cluster headaches, or brought on by other conditions as well.
Yes, the common headaches with which migraine can get confused are what is known as tension headaches, the sinusitis-related headaches, and much rarer are what you mentioned, cluster headache and new daily persistent headaches. Now, migraine is easy to recognize if you know the features, because as you have already mentioned, these are recurrent headaches which are associated with sometimes nausea, vomiting, inability to tolerate light, sound, sometimes smells, and they are highly disabling. The patient may not be able to function for almost 24 hours or even more. And there is a positive family history of not the same severity, but some recurrent headaches. Now, as against this, when you look at the other headaches, tension headache, they are more or less what we talk about them as featureless headaches. They are not associated with nausea, vomiting, disability, and they don't have trigger links so clear-cut as in migraine. Okay. And then when you come to cluster headaches, they are more always on the same side, accompanied by watering of the eyes, running nose, and they don't have trigger links too. So it is not difficult. And the commonest mistake which patients make on their own is to think that all recurrent headaches are due to a refractive error in the eye, and they go for an eye check to the ophthalmologist. They may have a small number, but they have to remember that if there are trigger-linked headaches, that eye problem is not the cause of their headache, and they have to seek correct medical opinion.
Okay. Well, you've mentioned trigger links, and that's quite an important part of migraines, a trigger which results in a migraine. Can you just tell us what is the most common trigger that one comes across when it is when one gets a probable migraine?
The triggers are generally divided across three different groups. One is the physiological within the body triggers. Two is from the environment and lifestyle. And there are some triggers which are beyond control. The commonest trigger that we see in our part of the world is related to the weather conditions, the type of temperatures we have, the heat, humidity in most of the cities for almost 6 to 8 months of the year. And then again, you have lifestyle-related triggers, which are the habit of not having breakfast on a regular basis amongst most Indians, and school children having to leave so early for school, they really rush with just a glass of milk. They don't have a proper breakfast. Skipping meals, the fasting habits across different religions in the Indian subcontinent is responsible for throwing up a lot more migraines. And stress, where stress leads to lack of sleep, poor quality of sleep, and now in modern day times, you find increased screen exposure. Computers have become an essential part of education, laptops, and the mobile phone. Mobiles are small screens, they induce a lot of stress and strain, which can be a trigger for migraine. And apart from this, certain changes in the body, for example, the fluctuating levels of estrogen which happen during the menstrual cycle of a woman leads to, is a trigger for more migraines in women that we encounter. So these are some of the triggers. And then you have foods which are different from the rest of the world. It is well publicized, well published all over that chocolates, cheese, and red wine are the commonest cause of trigger. But when you come to see it in practice, these are not the common items which are consumed by most Indians. Yes, of course, they are correct triggers: aging cheese, chocolates, and red wine. But we have different food items which have the fermented food items like idli, dosa, dhokla. These are items which can also give rise to migraine attacks. And then rarely you come across different triggers. Triggers are different across individuals who suffer from migraine. So they are not the same for everyone. And one has to be alert that triggers are not seen always and not easy to identify. In about 70 to 80% of patients with migraine, you can identify the triggers, but you have to remember that there are 15 to 20% of patients in whom triggers may not be easy to identify.
So it's important to eat breakfast, but to probably prevent yourself from eating fermented foods if those are triggers.
If that is a trigger, you will have to observe across different attacks as to what might have induced. When you keep a big list in front of you and try to match any of those items on the list to the attacks and you find there is a commonality, then you'll have to identify that as a trigger for you. So eating breakfast correctly, a wholesome breakfast that provides good levels of glucose to the brain in the morning, and also trying to avoid those substances which you have noticed could induce a migraine attack in you is a very important point. And more important is to avoid fasting. Fasting for religious reasons can take a heavy toll because there are people who are fasting 2 to 3 times a week.
Correct.
So that many more migraines you will have to treat.
So why, when there is an onset of a migraine or you know that you've been exposed to a particular trigger, what can one do at that moment?
It stands to common sense that as far as possible, you try and avoid that trigger. You can't, of course, avoid certain triggers like the heat, humidity, the weather conditions, but there are some things which are doable. For example, breakfast. You plan for the 10-minute breakfast. You plan for it the previous night and make sure the child gets up early or the breakfast is ready for the child before going to school. That's one thing. Selecting your breakfast. There are many breakfasts which don't need a long time for preparation. So that is important to plan for. And what triggers you can avoid, like skipping meals, delaying your meals when you're going to work. Now there are a lot of corporate people who continue to work and delay and postpone and have their meals at their lunch at 3 p.m. and so all that should be compulsorily avoided with a conscious awareness that you are a migraine sufferer whose body will not tolerate, because the human brain is highly sensitive. So scrupulously taking care of all the things like going to sleep at the same time, getting up at the same time, maintaining the chronobiology and doing the same things every day. You cannot party one night and then sleep at 9 p.m. the other night. And then, so you have to enjoy life too. But at the same time, you should be conscious of the fact that too much of variation in your routine daily lifestyle can trigger off more migraine headaches.
Okay. So what if you're exposed to a trigger? What if you had dosa for breakfast and it is hot outside as well, and both of them are triggers? What would you do at that moment in the light of the fact that you're probably going to get a migraine?
Yes, we instruct all our patients to be ready for a migraine headache at any point of time unannounced. So they should always be having their emergency medicine kept in their bag so that in case they get an attack, in fact, sometimes we tell youngsters also that there is no need to announce that you have migraine when you attend a party and stay away from pizza and pasta and other things. Keep the emergency medicines ready with you, and in case the headache starts, if you take the emergency medicine at the earliest onset, then you can abort the attack and you need not go through the usual suffering for 2 to 3 hours, and within an hour you can come back to normal functioning.
What is the medicine that one needs to probably look at?
One has to remember that migraine attacks are not all the same across different individuals. There are different levels of severity of migraine attacks. Some of them are mild, some are moderate, and some of them are very severe. Now, the moderate and severe attacks need specific migraine medicines to be prescribed by a doctor, clinician, but the mild attacks can be managed by the patient on their own. So what should be the first line of treatment, which is safe also? And the bottom line is that in any medicine that you take as an emergency for the treatment of an attack, whether it's mild, moderate, or severe, please do not exceed the cutoff level of 10 per month.
Okay.
So you have to stay within the cutoff level.
So it's 10 crocins or
Yes, whatever
it
medicine
is.
you take that relieves you.
It should not be more than 10.
Not more than 10 per month. Otherwise, you can get into a zone of what is known as medication overuse headache.
Oh, okay. And it has ramifications.
It has
on the
ramifications.
kidney
It could worsen your migraine headache, which you're trying to treat. So therefore, remember that overuse of acute medicines to abort your migraine attacks is harmful in the long run. So for mild attacks, what's the first line of treatment I would suggest, which is also reasonably safe, is a tablet of paracetamol. Now, paracetamol and a lot of migraine patients tend to have nausea, disturbance in the stomach, and tend to vomit also. So if you can combine a paracetamol with an anti-emetic or anti-vomiting tablet like domperidone and combine the two, then you find that you can abort most of the mild attacks. Some people benefit even with just application of pain balms, with a hot water bag, some people with cold packs. So that is also a doable for mild recurrent migraine headaches. Now, when you exceed the mild level and you find that that doesn't control your headache, then the next level are what are known as the NSAIDs, or what is in the ibuprofen category. Naproxen is one of the best in this category. So what borders between mild and moderate.
Okay.
Now the next higher level, which goes on to treat the moderate and severe one, I would recommend that you consult a physician who can recommend the migraine. There are designer drugs which are helpful only, which work only in migraine, and they do not work in other painful conditions like joint pains, back pains, and other things. These are called specific migraine medicines, and these are to be prescribed by a doctor. And to broadly mention the name of the category in which they are what are called as the triptans. These have been available for the last 20 years, and newer triptans are working better and better, and you find most of the patients can get relief using a triptan. And then there are some medicines which are available abroad but still to come in India, and these are called the GPANs. So this would be the range of drugs available. Then you have some nasal sprays also, some injection medicines also, but not all of them are available to us in India. So mild migraine you can self-treat. Take care not to exceed the limits. Moderate to severe migraine, get treated by a physician.
Okay. When do you see a physician?
When do you see a physician? When migraine occurs on a recurrent basis that hampers your quality of life, whether you're a student or whether you are ambitiously working at a young age in a corporate organization and would like to go up the ladder, or whether you are a housewife who gets recurrent attacks, you stay in a joint family, you can't get sick every now and then, it will be looked upon as you being a weak individual, because not many people understand that migraine is a real disease. Migraine is a biological, complex brain neurological disorder and not just anything psychological. So therefore, when your level of functioning goes down, and sometimes the attacks are so debilitating that you just cannot function, and you have to lie down in a dark room with the lights out, with the sound not being there, and the rest of the family has to go on with their routine work. Such are the times when you need to, when your quality of life is getting affected, then you need to consult a doctor, because just acute treatment alone, I always tell my patients, do not treat just migraine the attack, treat migraine the disorder, so that in the long run, long term, your frequency, your severity, and your quality of life should improve. It is not just treating today's attack. So you'll have to look at treating the disorder.
Okay. All right, doctor, we have a lot more questions with regards to migraines. We need to take a short break, but we'll be back with more. Stay tuned.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
My wife, for instance, and she's been such a big contributor in what I've become eventually. I think some of the soft skills actually, and these are aspects, and the ability to without getting sort of stressed, being able to manage many different things. I'll just give you one example. When I was a CA, typically, and many of the advisors, the Indian Economic Service actually are women. They would be in a meeting with me maybe at 3:30, 4 or something, and they'd get these calls actually, and they would be, because they're in a meeting with me, they would be, declining those calls. If the call comes twice or thrice, I knew this was actually either their kid or their mates calling basically for what needs to be made for dinner. Yeah. And so because that's exactly what, my wife, so when I was at ISB, it's the rare occasions when she was not instructing our kids or the maid to actually say what needs to be cooked. My kids would call me up. I would be at a loss actually.
Believe in your strength, right? What is your strength? Carry that, right? It is your deep technical knowledge, your perspective, because that's where the new ideas generate, right? So keep focusing on that. That is one thing that will give you a purpose. Second thing is networking, right? Network with people whom you come across, building the network where you can share your ideas, express them, trash them out. That is one thing which is going to be very, very helpful as you go.
Welcome back. Well, we have a lot more questions for Dr. Ravi Shankar on the common problem of migraines. There are some cases where a lot of children do get headaches and one doesn't know why. So how do you differentiate, and what does one do when a child gets a headache? How do you differentiate it between a migraine or a regular headache? Who do you see? Do you see a doctor?
Now, we have seen a number of children who get migraine headaches. The important thing to remember is that the pattern of migraine, children are not littler versions of adults with migraine. The pattern of migraine, the way it presents, is different in children than in adults. Okay. Now, migraine is an invisible misery where nothing is seen in the patient on examination and nothing is seen on investigation. Even if you do an MRI, you are not going to pick up any features that are unique to migraine. So therefore, it's most important that you detect migraine or you diagnose migraine by listening to the clinical features of what complaints the patient comes with. And in children, you find that there is the unilaterality or one-sided headaches which are seen in adults are not seen in children so often. They are on both sides and they are more in the front of the head, and you find that children have other complaints like giddiness, travel sickness when they are very young. Whenever they travel, they might throw up, and following that, they might have a headache. And children can present with vomiting and abdominal pain, a condition which is called abdominal migraine, seen much less often in adults. So children can present with abdominal pain, which is also a forewarning that this child is later on headed for migraine with headache. And apart from this, when a child gets trigger-linked headaches in school, particularly when the noise of the school bell ringing, or when during recess the children come down rushing together at the same time, you will find migraine children coming and telling their parents that they are unable to tolerate that noise. They can't stand in the sun during PT or the physical training periods, and they faint sometimes, they fall down, and when certain food items such as ice creams, cheese, pizza, pasta, these items give rise to more headaches, that is the time when the parents should realize that probably the headache they are having is not due to an eye refractive error, but it could be migraine. And the last clue, which is the most important clue, you will find that there is a member in the family, either a mother or a grandmother or a sister, who has also been through a similar situation, and that is when you should approach your pediatrician or a doctor to treat your headaches for the child.
Caffeine, should one have it when they think that they're getting a migraine? Should one have it to probably prevent migraines?
Caffeine is a double-edged sword. In a small quantity, it can help treat headaches. It is a combination in many headache medicines also. But when consumed excessively, it can be the cause of the headache. So therefore, caffeine can do both. It can treat headache in a small dose. It can cause headache in a larger dose.
Okay, all right. Dr. Ravi Shankar, it's been an absolute pleasure. We have a lot more questions.